ship.
Are we live? Looks like we're live on YouTube. We are launched.
All right. And we have Mr. Kaufman joining us through the YouTube world. I guess it's a Zoom world.
It is.
All right. So we're live, Clarissa. We're not expecting anybody else on Zoom. It looks like we've got everybody else. We're waiting on Senator Nethercott. Senator Nethercott is making her way to the building. It's a little tricky navigating, as we all learned this morning. So it's an interesting, it's a beautiful building, absolutely beautiful building, but it is an interesting path to get here from downtown. So all right. So just some general housekeeping before we call the roll. Welcome committee. We've got a lot of new members to the committee. Our governor's appointees are returning, so no change there. But in the legislature, we changed in the House and the Senate. So welcome new members, welcome senators, welcome Representative Stith, Senator Cost, Senator Furphy, and Representative Western, who was an alternate and kind of a member, now a permanent member. So we made that permanent.
Full-fledged.
Yeah, so welcome. And welcome to the first in-person meeting, actually, of the blockchain interim committee. All last year during the interim, we met virtually, isn't that right?
Yeah, absolutely.
Okay, so, and welcome to our guests as well. It's good for the legislatures in town. It's good to see faces beyond the Zoom world and getting back to normal and getting back to business and moving Wyoming forward. So that's always great. Couple of things on agenda wise. One thing we're not real sure whether we like or not, but there's a rule that if you're going to participate in testimony via Zoom, you had to sign up yesterday. But probably today, we don't really care much about that rule, but tomorrow we care about that rule because when 5 o'clock hits, I want to be on the road before 5 o'clock. That'd be great, even if it's 4:55, so I can get back to my family, and I'm sure everybody wants the same. So we'll just kind of play those rules as the days come. Anything from you, Co-Chairman Rothfuss?
Thanks, Mr. Chairman. Just a few thoughts about the nature of the committee. And, you know, we've been working for the past 5 years in this space and trying to build a really good framework for governance in the state of Wyoming on blockchain financial technologies, these advanced and emerging technologies. And we've done that through partnership and cooperation with stakeholders in the community and just trying to get feedback. So we truly welcome that. We appreciate those attending, those online that are attending virtually, those that will be watching throughout the day and tomorrow. And we look forward to that feedback and analysis as we work through these topics. We've got some new agenda items. We've got some returning agenda items that we're trying to refine, but we need that stakeholder feedback as we work through this process. And I want to make sure that we're all listening, all the members of the committee, when you receive input from your friends, colleagues, and other stakeholders, make sure that that gets back to the committee and that you're expressing that to the committee, because really that's where we get, I think, our best information and best ideas. And so once again, this is we've got some exciting topics ahead of us. We've got some hard work ahead of us. This select committee, I think we're up to, between the select committee, the blockchain task force, and other efforts in this space, we're over 25 pieces of legislation that we passed through the Wyoming legislature to create this framework, and look forward to working with this group and doing hard work in this interim to move that forward again. And I'll stop there. I think we've got a great agenda ahead of us, and see if there's any other opening comments by new committee members. We can probably do as we're getting to announcements.
Yeah, Representative Yin, please.
Thank you, Mr. Chairman. I just wanted to very briefly welcome everyone to Jackson and Teton County. Teton County is celebrating its centennial this year. It is 100 years old based on a special act of legislation by the legislature from 1921, because Teton County was at the time too poor to qualify as a county. So I welcome you all 100 years later, and hopefully we'll see another prosperous 100 years.
Mr. Chairman and Representative, it seems like it's only fitting that Teton County was created through special legislation. And Senator Nethercott, we're down here. Good morning.
Good morning,
And-
Senator Nethercott.
And with that, you think we should call for the roll call on the attendance?
Yeah, that sounds like a
Let's
good
get
idea.
it. Let's get attendance.
Can we call the roll?
Yeah.
All right.
Senator Furphy. Senator Cost. Senator Nethercott. Representative Stith. Representative Western. Representative Yin. Mr. Kaufman.
Here.
Ms. Long. Mr. Revel. Co-Chairman Rothfuss.
Here.
Co-Chairman Olson. Mr.
Here.
Chairman, you have a quorum.
Wow, all present.
Excellent.
All right. With that, let's get started. So our first agenda item is the insurance sandbox. And are we starting with Commissioner Rude? All right.
Mr. Chairman, committee members, I'm Jeff Rude, the Insurance Commissioner. Can you hear me okay? Excellent.
We can
Okay.
hear you.
With me also is Ms. Johnson, the Deputy Commissioner, and also with us, but really there in Jackson, is Mr. Raymond Brooks and from Reinsurance, and Mr. Lupin from UW, who we've been talking with. Just a brief background of where we're at. We first spoke with Mr. Brooks and Mr. Lupin back in February of this year. They were interested in using blockchain in a reinsurance model. They wanted to develop this model, but before they went down that road, they wanted to talk with us, and we had several discussions, and they wanted to know our main concerns. Our main concerns were really to maintain our accreditation standards. And, you know, Mr. Brooks is certainly well-versed in insurance, and he understands this, and he fully appreciated it. And our second concern was our department, we really lack expertise in this area, and we certainly lack the funding at this time to hire those experts that would be needed to assess one of these models that we were talking about. And so we went into discussions, and it turned out with the last session that there really just wasn't enough time to fully develop a model in order to get any legislation accomplished. In the last session, and we really couldn't shoehorn insurance simply into the existing fintech sandbox. That was probably the wrong thing to even think about doing. It just wasn't going to work. And so since then, we've met 6-8 times. Mr. Brooks has been working with industry to develop a model. He's talked with, and we're involving some very large, very well-established, reputable companies. And as the model has developed, we're getting there, but at this point, I actually can't tell you today what we would need the sandbox for, what sort of model and would take into account the sandbox where they need a waiver of some sort of our regulation. But I'll let Mr. Brooks address that. I am happy to say we are in complete agreement, this group of folks, about our accreditation and the requirements to maintain those standards, and that the funding is really going to have to come from industry. They're going to have to front the money in some way for our experts, or for us to find those experts and to hire them in the future. And we've been looking into ways of doing that. We've talked with LSO about the bill that has been drafted. I understand LSO was really tasked with drafting the broadest possible bill. And quite frankly, I mean, they included everything in the insurance code, which is fine, but that raised some concerns with us because built into that insurance code is all those accreditation standards, which we will never waive. And we didn't really want companies to look at a piece of legislation and see that those were on the table, that they could even consider asking for that kind of a waiver. So we went back to LSO and we gave them, we talked with them, and they're aware of all the various accreditation standards, which we would want exempted from any piece of legislation. I also have a concern. I think we're going to have some way to hold an application. If we were to pass something today and it went into effect tomorrow, we quite frankly could be hit with 20 or 30 different proposals from various companies in various areas, and we just wouldn't have the ability to deal with them within 90 days and either give them a thumbs up or a thumbs down. And so one of the things I think we need to do is have the ability just to hold an application until we have the funding and the expertise to deal with it. So that's really an overview of where we are as a department and working with Mr. Brooks and his group. personally talking with them, I think we can work a bill, but we may want to work it and wait till Laramie, just because we haven't developed the model far enough along yet to identify what the bill would need to do. And so that's just really my input on that. I'm happy to answer any questions. And once that's done, I'll turn it over things to Mr. Brooks.
Committee, questions? Representative Stiff?
Mr. Chairman, Commissioner Rude, I just have a question to try to provide an example of what new product might be offered under this regulatory scheme. So, for example, would a mortality lottery, a tontine, would that be something that you can't do today, but that you would be able to do if this proposed draft bill became law?
Commissioner Rude?
Mr. Chairman, Representative Stiff, I think I'll leave that up to the true industry expert, Mr. Brooks, on that. It's something, I mean, that's not what we're considering at this point. I don't think I have an opinion on whether the sandbox would allow that or not, because I'm just not familiar enough with it.
Please, Senator Rothfuss.
Thanks, Mr. Chairman. Just I wanted to take a moment, if I can, to provide a little bit of background on this concept, since we kind of jumped into discussion of what's in the bill. I think, as the committee knows, we had legislation that came through the task force a couple of years ago that was a financial technology sandbox that related to both the Division of Banking and the Secretary of State's office, so that there would be some flexibility wherever either of those entities had oversight, providing them with the ability to accept or exempt certain statutes or certain regulations if they believed it was reasonable. It would be on a relatively small scale. There would be requirements of additional sureties or oversight that the entities felt were appropriate to protect the public. And then that would allow a couple of years of opportunity to work under an alternative structure to test concepts that might not otherwise be down the middle of the plate of what's allowed under statute. The request, and we'll hear more about it in a moment, was, well, we might need some flexibility in the insurance space, and that there are some advanced and emerging technologies in insurance that could take advantage of a sandbox situation if we had that flexibility available. And so this draft is effectively a mirror at this point of what we had a few years ago with regard to the Division of Banking and the Secretary of State's office. And the request was just drafted so that it's as identical as it can be to that previous statute, which has worked well for us and was well thought through. And I'll note that there's no intent, and this is to Mr. Rude's point, of passing and advancing this legislation today. It's one that we want to be able to talk through, have it on the table, since we knew what it was going to look like as its first draft, and then think through a lot of the questions that will come up today, so that we can contemplate it, continue to work on it, and look at it, hopefully have some good ideas on how to refine it appropriately for the September meeting. But the concept does mirror the concept that we had previously, where the first request was in the reinsurance space, and there's a lot that we need to do there. But I don't think we want to be limiting it. At the same time, the idea of something along the lines of a tontine, where maybe we could provide exceptions in statute that would allow for that. At the end of the day, it would also be up to the commissioner to decide, is this a good idea? That's going to be a part of it. And you know, I don't know that Commissioner Rude would be saying, hey, yeah, let's try and make Wyoming the tontine capital of the world now that other countries have moved past it. Let's bring it back to Wyoming. But again, there's a lot of opportunity to explore those conversations and determine if it is a good idea moving forward. And I don't know whether tontine would quite make it to that point. But as drafted, the answer is probably yes. This bill could probably do that. But as Mr. Rood pointed out, we would at that point be risking accreditation. And I'm hopeful that no decision at any point would be made that would risk accreditation. And that's something we have to talk very seriously about, is which provisions we leave in this legislation and how we structure it in such a way that we don't provide an appearance of threat to accreditation or an opportunity to. And we had similar conversations on the financial technology sandbox with regard to securities in the Secretary of State's office, where the Secretary of State is obviously not going to do anything that violates United States security laws. And they made it very clear. And in fact, they requested, well, just take those provisions out that would allow us to. And we didn't take those out because at the end of the day, we decided that we didn't know what the future held. And we didn't see any risk to leaving those in. If Mr. Rood believes there's risk, and if others believe there's risk to leaving them in terms of the appearance of potential accreditation violations, then that's a different conversation that I think we should have. So that's a little bit of background I wanted to provide of what generated this and how we are where we are before we hear from Mr. Brooks and other proponents.
Very helpful. Wouldn't you agree, Commissioner Rood? That was the question.
I'm sorry, actually, Mr. Chairman, I didn't quite hear, you faded out there for a moment.
Oh, I just said, wouldn't you agree, Commissioner Rood?
Oh, certainly I would.
Senator Furphy.
Thank you, Mr. Chairman. My concern on all of these type of products is protecting the consumer. So I don't know how we issue some of these products to consumers, et cetera, without creating some risk for them and some liability to the state. I appreciate your comments on that. Thank you.
Thank you, Senator. All right. Commissioner Rood, do you have anything else, or did your deputy have something lined up to discuss with us?
Mr. Chairman, not at this point. We pass it on to Mr. Brooks unless there's a specific question.
Okay. Well, I don't see any. Stick around. We'll move over to Mr. Brooks. Come on up to the hot seat. The way we used to do it. It's a lot more fun. Yes.
Are you green?
Oh, yeah. Make yourself
Yeah,
green for the
otherwise they
record.
won't hear you.
Okay, no, there we go. How would you like me to proceed?
First, introduce yourself, just because it's a historical record.
Yeah.
Even though we know who you are. And then if you just dive into your comments that you may have.
Good morning. My name's Raymond Brooks. I'm a resident of Jackson, Wyoming. I have spent my career in financial services, most notably in the reinsurance business. And we'll talk about reinsurance in a moment. I came to you vis-a-vis Dr. Edward Seidel, who I met. And Dr. Edward Seidel's the president of the University of Wyoming, and I met him last September 2020 here in Jackson, where he asked me to help think about what financial services could we bring to Wyoming that would support economic development and innovation. My response was, I have one playbook that I know exceptionally well, and that's reinsurance. And I felt like reinsurance might have an application here in Wyoming because reinsurance is not consumer facing, it's business to business. It's an institutional business. It's a business that does not employ large numbers of people, but it does aggregate large amounts of assets. We're going to dive into all this in just a few minutes. We'll talk about consumer protection, and we'll talk about how we regulate, and we'll talk about some of the things that the Insurance Commission and we have discussed. And when I say we, I have assembled a working group of various large financial corporations that are interested in the space and are exploring how can we come to Wyoming with the best initiatives. I think as an opening statement, whatever we do collectively, we want to set the bar high enough that in no case will Wyoming be at risk for the entrance of players who are not fully accredited in the industry, who would jeopardize the state's accreditation with the NAIC, who would tarnish our state's reputation. I come from the Bermuda and London markets. We have very high standards in our regulation. We have very high standards in our capitalization. And so everything I'm going to present to you today and in the future will be in that spirit. If I may, if I could just talk about the difference between reinsurance and insurance, and Senator, I'll touch upon consumer protection because I sincerely appreciate what you're saying. Reinsurance is, as I mentioned a few minutes ago, a business-to-business insurance. Reinsurance is the insurance for other insurance companies. So when I ran my reinsurance company in Bermuda, my clients were large London and European insurance companies. And my job was to provide capital to them so that they could write more insurance, primary insurance. Primary insurance faces all of us. Whenever any of us goes out and buys an annuity or life insurance, we do so through a primary carrier. Those primary carriers then aggregate all of our policies and reinsure or sell to a reinsurer. It's akin to in the mortgage market where local mortgage brokers and banks aggregate mortgages and then put them into a larger securities market. We, in this conversation over the next 6 months, are going to focus on what I call long duration insurance. Long duration insurance examples are annuities, some form of life insurance. And the example we're going to talk about today is long-term care. Long-term care is facing some challenges in the United States, and we're going to talk about why we would want to provide reinsurance and how we would protect the policyholders and the state. Long duration insurance has a life of 15 to 40 years. So when we think about auto or fire, has very short duration, right? We write all of us, when we have auto insurance, we renew it annually. So that's a 1-year policy. But yet when we buy an annuity, we think about having a payout over the rest of our lives. And so we're going to talk about the latter. We're going to talk about this long duration insurance. In long duration insurance and in all insurance, we think about risk in the form of the severity of the risk and the frequency of the risk happening. And we're in a low severity, high frequency sort of business because we know everybody's going to die at some point. So we're either underwriting mortality or we're underwriting longevity. We're either underwriting the risk of somebody dying too soon or the risk of somebody living too long. But we know it's going to happen. So as we take it back to consumer protection, in the reinsurance space, the regulatory framework is focused on solvency. Solvency is all about the reinsurer being able to pay claims in 20 years, 30 years, or 40 years. Now that's different than traditional consumer protection, which is about mis-selling, misleading, creating products that are fraudulent. But solvency is about consumer protection. It's just a different form. We're looking forward 40 years or 20 years, and we're testing monthly, quarterly, annually, and reporting that. So that's the regulatory framework of reinsurance. Mr. Chairman, would you like me to continue? Yeah.
Yep, you're doing great. I'm
Thanks.
just soaking it all in.
It's fascinating, isn't it?
It's a learning process. in the
Yeah.
Wyoming legislature.
Yeah.
And we're kind of slow learners.
I mentioned in my introduction that I came from Bermuda and I'm a US citizen. So why Bermuda? Well, about 40 years ago, the US Treasury decided that it wanted to see some of the US insurance risk get out of the US economic system. And so they encouraged US insurers to go to Bermuda, set up shop, and while the business is operating in Bermuda, it could generate revenue and profits tax-free. Those profits would be taxed when they're repatriated to the United States, but they could operate in a tax-free fashion. Why? Well, in effect, the US Treasury wanted to create a lower cost of capital for these insurers to get the risk out of the system. Now we roll forward 40 years. Bermuda's created a very stable, credible regulator, and it is very commercial. The Bermuda regulator is known around the world as being a very reputable regulator, and that's why businesses flock to Bermuda. However, in that 40 years, there's been global integration. Now all of the Bermuda reinsurers are owned by a large global insurance company. Could be one based in the United States, could be one based in Japan. So we've seen integration and the tax advantages have been reduced. Most Bermuda insurers now are paying tax in their home country. Those that are owned by US companies are all paying tax in the United States under 953D elections. So while Bermuda remains a very credible and high criteria, some of the economic benefits have started to disappear. And so one of the questions we're asking ourselves in building this economic model is can we create a framework, an economic framework, an economic model that would allow reinsurance companies, not primaries, not consumer facing, but wholesale reinsurance companies to operate efficiently in the state of Wyoming. And that's our model. And that in and of itself is a form of financial technology. So why Bermuda? As I said, the industry left the United States for bona fide reasons, and that has evolved. And so now that we've seen integration in a lot of these reinsurers starting to become US taxpayers again, we're saying, how can, and I mean this with all sincerity, how can Wyoming's greatest asset, which is the legislature, who's very nimble and very aggressive, how can we pave a new way? Is it, yeah. Did you like that?
Hey. Can we hold the laughter?
How can we pave a new way while others are bogged down? And how can we pave a new way to create economic revenue for the state of Wyoming? Can we create a first mover advantage is a great question. And that's what we hope to discover over the summer. I've submitted a presentation to you. And in that presentation, I think we showed you a revenue model. I think it's on slide 9. It's an example. It's really an example. We need to work through this economic model to understand what the industry can afford. And we hope to be able to present you some key conclusions in Laramie. And I think in that presentation, slide 3 outlines our work plan. But that, back to slide 9, that revenue model is we're saying, hey, wouldn't it be great if we could attract these assets to the state of Wyoming? Wouldn't it be great if we created an ecosystem here in Wyoming where those assets are housed in Wyoming institutions held by Wyoming custodians, held in Wyoming trusts, foundational trusts, all under the authority and oversight of the Wyoming Insurance Commission? And could we generate enough assets under management, and could we create an economic model that could afford to pay the state a business fee, activity fee based on assets under management? That's the model. And it's meant to be a very simple model. And the reason we're choosing not to use a premium tax model is because a lot of times in reinsurance, by the time the reinsurance occurs, the actual premiums are starting to decline because the customer has paid in. And so we don't want to create something on a declining model, but we want to create something on a very sustainable base, which is assets under management. I would tell you that I gave you 3 examples, 2 billion, 5 billion, 10 billion. I would describe a 2 billion asset model as a startup. That's one transaction in a normal reinsurance environment. I'm calling that, like, that's the first step. 5 billion is, in my mind, when the first business becomes a credible player. That's kind of the inflection point, the tipping point for the business to be able to really staff and really grow. 10 billion is the next inflection point. So the question is, how much AUM can that business pay? And then again, depends on what we are able to create between now and Laramie. I'm gonna give you a context of what Bermuda looks like. Right now, in the long duration asset space, in 2020, in the long duration asset space, Bermuda companies hold over 600 billion of assets, employing about 700 people. Okay, we're not trying to become the next Bermuda, but wouldn't it be great if we could get a percentage of that, if we could attract some segment of that 600 billion? And there's a lot of that money on shore too. So what we want to do is create a framework that attracts that business. The one thing I think is really important is something that Commissioner Rood touched on, and that is the risk of accreditation. I can't think of any industry participant that would want to go to any jurisdiction that has a risk of losing their accreditation. I can't think of any industry participant who would want to go to a jurisdiction where the regulator is not credible, and therefore we could not transact with other jurisdictions, whether it be other states or other countries. So holding the bar as high as we can and setting the stage so we only are attracting credible applicants, applicants who are bona fide, applicants who are coming to the state because they believe they can make a difference. What we don't want to do is create an environment where the Department of Insurance is overwhelmed with non-credible applicants. They're not staffed for that, nor do we as a state have the resources. And having said that, when we get into the draft legislation, one of the things that I'm going to be an advocate for is a fairly robust application fee. In Bermuda, to do what we're talking about doing, the application fee is about $200,000. To get the business up and running just on a regulatory context, to pay for the regulators, third-party advisors, that $200,000 application fee, we're probably talking close to $1 million to get it right. So I just think it's really important that we collectively set a stage that we're only attracting, the best capitalized and the brightest management. So what do we need to happen next? Well, if we go to slide, I believe it's slide 3 of my presentation. We are working diligently with the Insurance Commission, and we are working on this economic model. And this economic model is meant to take a live transaction or live transactions that we are using as proxy transactions. We're not saying these will be the first, but they're live, so we know that they're credible data. And we're building a balance sheet that we want to translate into investment guidelines that we can sit down with the insurance commissioner and say, these are the assets we would want to hold. This is how we would want to build our balance sheet. This is the solvency associated with this balance sheet. We can predict the solvency. We can predict the credibility of our ability to pay in 10, 20, 30, 40 years. And then hopefully turn that, codify that, all of that economic model into enabling legislation, whether it be rule-based changes or legislative changes. With that, Mr. Chairman, I think I've covered the presentation.
Joel?
Thank you, Mr. Chairman. My question is, Mr. Chairman, if we could sort of look at the opportunity here, the total addressable market sounds like is about 600 billion in assets, if I understand correctly, that's in Bermuda. What is a realistic market share that could potentially or would be compelled to migrate if that framework, if a comparable framework were to exist onshore in Wyoming? And I have a follow-up question, Mr. Chairman.
Yep, Mr. Brooks.
Thank you, Mr. Chairman. Going back to my slide 9, I think that first company, it's reasonable to think that when it's mature, has assets under management of 10 to, on the low end, 40 on the high end billion. So if we could attract 2 to 3, I think that's a reasonable case. I think the great thing about the insurance land is you don't need a lot of participants to create a lot of assets under management. This is a very scalable business. So focusing on getting the most credible players and letting them scale up is probably the best strategy for the state.
Follow-up?
Yeah, thank you, Mr. Chairman. So if I heard correctly, 10 to 40 billion, so call it an average of 25 billion times 2 to 3. So that's sort of 50 to 75 billion. And so a roughly 10% market share, if I'm doing the math right. And by the way, my high school math teacher is on this committee. So if I'm doing it wrong, I assume that Senator Cost will correct me. So about 10% market share. And then what would be a reasonable AUM to expect, that would be competitive in the marketplace?
Right. So, Mr. Chairman, when we think about AUM fees, I think that if we get this model right, a market AUM would be kind of the market would be kind of in the 5 to 7. I'd love to see it get north of that.
Good. Mr. Chair, if I may, what is the revenue model in Bermuda? Is it the AUM, basis points on AUM, or is it the premium tax that you were contrasting it to earlier?
Mr. Chairman, Bermuda is, over the 40 years, has really evolved and it's become very complex. And there's so many sources of revenue. And with all sincerity, what Bermuda has done, it has payroll taxes, it has various filing fees, it has layers of revenue. But one of the things that Bermuda has done has said that to operate in Bermuda, your head office requirements are CEOs, chief investment officer, CFO, general counsel, all have to live on the island. And then they've created a set of legislation that says, and if you're an expat, you have to live in this category of home. So they've done a phenomenal job of supporting the entire economy through the reinsurance business.
Now, see, we could model that with an exclusion of Teton County, the rest of Wyoming. But that's very intriguing. Did you have more follow-up? I'm enjoying this exchange, so.
Thank you, please do. I've got more, but I'll yield for now.
No, you just keep going. I'm enjoying your diving into it.
Thank you, Mr. Chairman. Question I had was about next question I had was about your slide 5.
Yeah.
If you could talk about, I think an important thing that this committee and its predecessor did and the legislature did was
around digital assets was not have a sort of easy, fast, and loose regulatory framework, but actually set a standard for proper legal framework and regulatory oversight for digital assets. And I'm sure the same would be expected of this legislature for reinsurance. So given that, could you talk about what you would envision in terms of regulatory and legal framework?
And I would invite Commissioner Rood and Deputy Commissioner Johnson, whom I can't see, but you can, to speak, to go ahead and comment alongside of me. I think what industry participants want is what is reflected on this page. We want a very stable, credible regulator, but one that is commercial. And when I say commercial, we're actually not expecting, waivers and favors in the night. We want somebody who can work with us if we have a change in our economic model to try to understand what either the opportunity is, or if we're having a challenge. Let's sit down and talk about it before it becomes a real issue. There are very few reinsurance companies that have failed from reinsurance. They've failed from other things. They've failed from getting into the wrong investments, but they haven't failed from reinsurance. And part of that is having an economic model and a regulatory framework that flags problems. When I was running my reinsurance company, I used to say to my team, good news travels fast, but bad news better travel faster. And that's how I'd want to operate with the regulator. I'd want to be in front of the regulator as soon as we think we have a compliance issue. So back to my page 5, I think credibility is of utmost importance. And I think criteria for the regulator to have criteria of who is allowed to enter the state. And I'll give you an example. In Bermuda and in the UK, for a management team, a new management team to enter the business, we have to go and be interviewed in front of the regulator. And the regulator has to determine we're fit and proper. The regulator has to know that we've run insurance companies before. The regulator has to know that we've run assets before in an insurance context. The regulator has to know that we have risk systems and that we have good governance. They want to know who our board members are. Now, they don't always have veto rights. But if we don't have the right team, our life is going to be pretty miserable. So we want to have that credibility with the regulator, and we want to have that criteria that the state of Wyoming isn't going to be susceptible to a bad player. I hope I answered the question, Mr. Chairman.
Yes, thank you, Mr. Chairman. My last question, and that is, could you explain in layman's terms exactly how the legislation needs to change in Wyoming and how that foots to existing law within Wyoming or other states? How big of a departure is it? Mr. Brooks.
Mr. Chairman, I think that there are two answers. I think there's one subset of answer that's going to address this economic model. And my sense is, after understanding Title 26, is there's going to be a series of rule-based changes that are really going to be clarifying in nature. I don't know, there may be some outright changes where we'll ask for certain investment guidelines to be modified, but most of the changes will probably be clarification in nature. In other words, Title 26 didn't envision this conversation. It didn't envision this business model. I would say that there's also some new model law coming out of the NAIC related to transactional frameworks that we would request and encourage the legislature to consider and adopt.
Thank you, Mr. Chairman.
Representative Western.
Thank you, Mr. Chairman. Mr. Brooks, I also have a couple of questions for you. Other than knowing that it exists, I don't know anything about the reinsurance markets. It sounds like accreditation is extremely important. I briefly looked at the NAICS website and saw that's a very lengthy process, but if you can maybe just kind of walk us through what that accreditation process looks like, the criteria in the context of a sandbox for insurance and reinsurance companies in Wyoming. What are that key criteria that really brings that legitimacy that's really important in this whole equation?
Mr. Brooks.
Mr. Chairman, again, to best answer Representative Western's question, could we invite Commissioner Rood and Deputy Commissioner Johnson? Because my perspective is that from the applicant, and they really are most fluent in the accreditation process.
Well, then it wouldn't be a hot seat if you got to. But we can, after we finish with questions for you, Mr.
Yeah,
Brooks, we can hold that question.
But
and circle back.
why don't I speak to
But
this?
you can give your industry perspective.
Yeah, my
if you
industry
would.
perspective is, I'm going to try to answer a question like this. It's the accreditation process is jeopardized when, from my perspective as an industry participant, industry participants start to invest in the wrong assets, when we start to run our businesses outside of the agreed upon economic model, when we start to tamper with assumptions, whether they be asset assumptions, liability assumptions, such as who's going to die and when, how many cars are going to get in an auto crash. When we start to tinker with that stuff, and when we do that simply to optimize our profits, or maybe even just stay alive, that's when accreditation is at risk.
Well, Mr. Chairman, Mr. Brooks, how big is the reinsurance market in the United States or for US assets?
Mr. Chairman, that's a great question. And this is the hot seat because I don't know the answers to that question. It's in the trillions. The reinsurance business is truly the invisible banking system in this United States. The reinsurance business buys mortgages, it buys infrastructure debt, government bonds, stocks. It is probably one of the biggest balance sheets in the country, but it's a number I don't have with me.
Mr. Chairman, so trillions in assets.
Trillions.
Oh, Mr. Chairman. So we're kind of talking about this in the context of a sandbox, giving them this leeway, this regulatory leeway to experiment with some of these new products, new business models, et cetera. Like any opportunity, timing is crucial. And you can have really good ideas, but your timing is terrible and the whole thing falls apart. Where are we at in the timing of this kind of new cycle? Because it sounds like there's some type of shift undergoing, certainly in national reinsurance markets, perhaps internationally. Where are we at in this timing? Is this just a nascent idea that has not really come about, or are we kind of behind the ball here? Where are we at in that cycle?
Mr. Chairman, I think globally, we're starting a new reinsurance cycle as a result of the pandemic. I would say within the United States, within the context of this presentation, within the context of long duration, within the United States, just in the context of the United States, we're in the front end. Bermuda's been at it for probably a decade now. They're doing a great job. Again, we're not trying to take on Bermuda. We're just trying to create an onshore capacity, a friendly regulatory framework. So I would say we're on the front end because I can't think of any other state that's really done it. Now, not all the other states have what we have here in Wyoming, which is the very efficient tax structure, the nimble legislation, an entrepreneurial community, and most importantly, we're not bogged down with a lot of legacy regulation that was created 25, 30 years ago around a lot of other players. We only have 4 domestics in the state, and none of them are reinsurers.
Chairman, follow-up. So it sounds like our timing is good right now. How long do you think this opportunity will last to capture on this new desire, this new opportunity that reinsurance companies are looking for?
Mr. Chairman, the reinsurance companies that I think are candidates, probably right now, if they were looking at Wyoming, have 25 to 40-year horizons.
And some of these companies that are looking, Mr. Chairman, some of these companies that are looking to look for these alternative opportunities, if we're kind of ahead of the curve right now, certainly in the context of the domestic market, how long will this opportunity be around until they start making a decision to go elsewhere? We're looking at 12 months, 18, 24.
Mr. Chairman, I think the interesting thing about financial services as a whole, but insurance especially and reinsurance especially, is the industry forum shops for the right regulatory framework. And if people can find a more efficient jurisdiction to domicile, they'll migrate.
Ms. Long. Please.
Thank you, Mr. Chairman. Mr. Brooks, how would it work in terms of the assets that the registrants would have to pay to the Secretary of State? So the background here is that every registrant in Wyoming pays 2 basis points on their assets located in the state. I presume all these assets would be located in the state. So that would be another revenue stream. The banking industry is exempt from that, except the special purpose depository institutions are not. So that's the play on the revenue for the state with regard to special purpose depository institutions, which is asset gathering, and the state gets its 2 basis points. Is that the play here, or is it just premium taxes? Thank you.
Mr. Brooks.
Mr. Chairman, the play is exactly that, assets under management. And the model, the legal and economic model that we're envisioning would be a Wyoming custodian would hold the assets in a Wyoming trust so that if there is an issue with the insurer, the insurance commissioner has an efficient legal means to reach out and grab the collateral. Those assets would be taxed. Feed.
Mr. Chairman, follow up. Someone on the committee may know the answer to this, but I don't believe the trust companies pay that tax either, do they?
Joel, do you know? We can bet
Or
the
pay that
trust guy.
fee, I should say. It's not a tax, it's a fee, right?
We do not. We have regulatory capital requirements as trust companies, and that's it.
Mr. Chairman.
Excuse me.
Mr. Chairman, yeah, I mean, that's one of the interesting aspects of this, right? Is that all these assets are coming into the state and some of them pay the 2 basis points. Others, like the banking industry and the trust industry, do not.
Mm-hmm.
Just an observation.
Maybe the banking industry should pay.
We'll have to contemplate that.
That's all right, Senator Rothfuss.
Thank you, Mr. Chairman. I have a couple of questions, and we've talked about some of these ideas before, but it does seem like there are some well-defined changes that probably need to take place that would facilitate this type of development, and that those could potentially be clarified through a separate piece of legislation that doesn't require a sandbox of any sort, as I understand it. And is that something that you and your community and in conjunction with Mr. Rood and the Insurance Commission have focused on also? These are specific changes that would enable that delineation that you discussed, where the reinsurance sector can be managed differently from the direct-to-consumer insurance sector?
Mr. Chairman, yes, to mirror back, yes, that's exactly what we're thinking procedurally. We're saying, okay, what are the rule-based and legislative changes? And then secondarily, does this require a sandbox?
And Mr. Chairman, another question along those lines. We look at the division of banking and the successes they've had based on what is effectively their business model, so to speak, that they're not a general fund organization. They're funded through the fees that they charge, and those are sufficient to pay for their operations. And then we work with them to ensure that they have sufficient staff and resources available. Do you think that then would be a more appropriate model, perhaps, or an appropriate model as we're looking to ensure that there are sufficient internal resources? And I'll ask the same question of the commissioner, so that they can be responsive, and that industry, the reinsurance industry, would be willing to pay the sufficient fees and work with the commissioner to determine those fees so that it's off the general fund budget and onto the pay for service budget.
Mr. Brooks. Mr. Chairman, I think that's exactly it. So the model that we're thinking of, just to clarify the point, is exactly what Senator Rothfuss described. There are two sources of revenues. There's a source of AUM that's paid to the state, but also we have to pay licensing and oversight fees to the Insurance Commission to pay for their expert advisors and their staff.
And there's an application fee.
And there's an
Back
application.
that up.
Yeah.
You noted the application fee was $200,000 in Bermuda. I don't know what it would be in Wyoming, but that certainly adds to it as well. One, it makes sure serious players are playing if there's a substantial fee. And two, it does provide some seed money to get things moving, because the taxation or the fee on AUM wouldn't occur until we knew what was under management. That'd be a year out or years out, possibly.
That's correct, Mr. Chairman.
One more question back to the legislation, and we'll go through it in a little bit, but the concern of having the floodgates open and folks come in and make applications because the barrier is high. One thing that's not in here, but certainly could be, as written, it already requires that it be a domiciled entity in Wyoming with a physical presence in Wyoming, which is consistent with what we did before. If the entity making the application were already NAIC accredited, would that be sufficient? Or because at that point, if you're already a NAIC accredited entity, it seems like you've gone through a validation and verification process. And then if you're bringing a unique product and you're Wyoming domiciled, it almost seems like you've checked enough boxes that you kind of have to be credible. Do you think that's reasonable?
Mr. Brooks?
Mr. Chairman, I do. Now, this is really a question for the Insurance Commission, but as an industry participant, I think that if you're residing in another jurisdiction that's recognized and credible with the state of Wyoming, and you're a credible player and you're compliant with whatever tests are required of that applicant, yeah, I would think that it's a long way.
Okay, thank you.
Is the NAIC the only accreditation? Are there competing accreditations, or is that the only one we have in the United States?
That's the only, Mr. Chairman, that's the only one we have in the US.
Representative Stiff, did you have a question?
No, thank you very much, Mr. Chairman.
Senator Furphy. Okay.
Mr. Chairman,
Oh, Senator Nethercott.
I may want to go back to the library this morning. I'm not sure. Mr. Chairman, thank you. Just as a reminder for the members of the legislature, and I think also for the public who might be watching, you voted last year on Senate File 14, which is the updated model code for NAIC regulations in our statutes for credit for reinsurance. I would encourage you to go look at that because it really outlines very clearly what some of those capitalization requirements are concerning reinsurance. And I think it really illuminates a number of issues. So Thank you for your aye votes last year on Senate File 14. So moving forward and hearing the question from Chairman Rothfuss concerning this issue about an NAIC accredited insurer coming to do business here, what I'm struggling with understanding is what we can specifically do to attract those businesses from Bermuda here that isn't already existing. And should we be thinking about what we should be doing, or should we approach it from the sandbox position of letting them come forward and say, hey, these regulations are what's giving us pause, and our business operation could be easier. Would you consider us operating without these regulations? And so I am having a hard time understanding the specifics associated with the regulations that they're currently subjected to, particularly if they're NAIC, right, which would be robust, and what they would not want to be subjected to that Wyoming could provide a space for. So what are we looking at? What topics are we really driving at for reducing that level of regulation that we could compete with Bermuda with, very specifically, either to the commission or Mr. Brooks?
Mr. Brooks,
Mr.
I
Chair,
think that, and I'll just say maybe the legislation, which we're going to dive into in a minute, is written really broadly. And I think the exercise eventually is to narrow that, which is Senator Nethercott's question, right? But I think if you have some, I mean, it's okay to start giving us direction on how to
Yeah.
narrow that.
yeah, I think the direction, Mr. Chairman, the direction I'd reply with is, I think within Title 26, there's a section called investment guidelines, which is silent on a lot of the assets that might be most applicable to long duration liabilities. And if I may explain that a little bit. Long duration liabilities, and this is a philosophical view that's shared by many in the industry, that to run the best, safest, most solvent balance sheet, you want to match the needs, the cash flow needs of the liabilities from now to the longest dated liability, let's call it 40 years, with assets that are going to produce enough cash flow and surplus to make sure that the reinsurance company can pay all of its claims to the end of that period of time. There are a lot of great assets out there, including infrastructure debt, various forms of equities, long-tailed assets that aren't specifically commented on in Title 26. So it's what we're trying to do is update and model Title 26 to allow the reinsurers to best manage these liabilities. So that's one thing. There's another exploration that could take place that Bermuda has that doesn't really sit comfortably within the NAIC framework. And that is just some of the ways we think about capital charges around our liabilities and assets. That's the capital that the insurer needs to hold. And that is an exploration that the NAIC is taking kind of nationally. And the question is can we adopt some of the changes here in Wyoming? And that's just going to have to be a part of the exercise that we take going forward.
No follow-up?
Can I follow up on that real quick?
Sure.
Thanks, Mr. Chairman. One other thing that we discussed at an earlier point, whether it was during the session or before, was the idea that a lot of our statute assumes that it's a customer/consumer-based interaction. And so the regulatory requirements are oriented towards that. We've got a front door business and we have to have appropriate protections that are emphasized for a consumer, when with reinsurance, there really is no consumer relationship. And I think that's a delineation in statute where we can clarify if you don't have any consumer interactions, you don't have obligations to adhere to all of the consumer protections. And it's my understanding that that's another area where it doesn't necessarily give us an advantage over another jurisdiction, but it's something that we would want to statutorily address if we wanted to work with the reinsurance industry. Is that an accurate assessment, or did I miss or mischaracterize anything there?
Mr. Brooks?
Mr. Chairman, I think that's an accurate assessment. And I think it also goes to the, opening remarks about consumer protection. I think they go hand in hand. If we can delineate, we can properly monitor and manage the solvency of the reinsurer and also keep them out of the primary insurance business.
Okay, let's do this, committee, because I'm going to keep us on task here. So I've got I'm going to move to Mr. Goldberg, and then I'm going to jump to the legislation. And then we can take public comment and circle. I mean, our conversation's not ending. I know we still have some questions for the hot seat, but we've got an entire interim. And I think at one of the things that's going to happen, to Senator Nethercott's point, is that once we begin to narrow this, right now we're talking very broadly. So I think once we begin to narrow it, we'll be a little more efficient with that. One action item I do have for LSO already is, I think because we don't all serve on the corporations committee, like Senator Nethercott, I think it would be helpful, a real just, minor white paper on, because a lot of these questions about the reinsurance, what is reinsurance, the reinsurance industry, what does it look like in America? Some of those questions about what is, going back to Joel's questions and Cyrus's questions on the market, what does it look like? Some of those laws look like across the United States. We've talked about Bermuda, but in the United States, what does it look like? And I think that will help get this committee up to speed. So I'll just dump that on you now, David.
Mr. Chairman, do you want to bounce back to Commissioner Rood real quick?
Oh,
See
for
if he has any comment on what
some
we
of
talked
those.
about? Yeah,
You want to do that now?
maybe.
Or
if he
let
has
him-
anything.
I mean, he may have more.
Okay, later. Sure.
Yeah, let's bring him back in after we get through
Okay.
Mr. Goldberg and then the legislation, then we can really put him in the hot seat.
Sure, sounds good.
Okay. All right, you're out of the hot seat unless you have anything else.
No,
For
no,
now.
Mr. Chairman.
Okay, thank you. Mr. Goldberg, welcome. Introduce yourself.
Thank you,
Let us know what you
Mr.
want us to hear.
Thank you, Mr. Co-Chairman. I'm Ron Goldberg, Strategic Partnerships Director for the Wyoming Business Council. I was asked to provide an overview of how this topic may complement the Wyoming State Economic Development Strategic Plan. And I've really been interested in this discussion. And frankly, I'm happy that I'm not the only person on this meeting who's heard of reinsurance, but is wondering how it all works, and look forward to hearing more from Mr. Brooks and others, Mr. Rood, about the development of where we go. I'm not here to talk specifically about the legislation, of course, but maybe more so from a state economic development agency and all of our partners from a customer service point of view. So I did get LSO the PDF of the one page of the State Economic Development Strategic Plan. And after I've run through this, some of how it complements the plan, I'll provide a few examples of not specifically related to reinsurance or this possible draft legislation and the Laramie meeting coming up, but more about the efforts the legislature has made the past 3 years and some of the things we're seeing complementing the plan. The plan at its core is to add value to our core industries, natural resources, tourism / outdoor recreation, and agriculture, and activate new economic sectors. Could be healthcare, financial, scientific, and professional services, digital and technology, arts and culture, advanced manufacturing. So there are a lot of words in there that directly tie to this committee. And we have worked with this committee, and we look forward to continuing to do that. So some examples of how it complements the plan: the activating new sectors. There's recruitment of companies in new sectors, business recruitment manager, Wendy Lopez, has been very active in that. And leverage partnerships, coordinate interagency plans and programming. This could be UW. Sounds like Mr. Rude, we're going to be connecting with the Department of Insurance. Look forward to that. And increase communication across partnerships, increase alignment and clarity of roles and shared objectives. For example, our recruitment and business technical assistance, we have a startup and entrepreneur assistance manager, Bert Adam. He and Wendy are really kind of the lead on this committee, and the blockchain, fintech, and digital innovation efforts. And then the expertise, leverage industrial expertise to add value to core industries and activate new ones, increase functional expertise in key areas of economic development, innovation, supply chain, startups, market development, workforce amenities, infrastructure, business recruiting, and finance. So to kind of sum that up, some of the benefits we could see that complement the strategic plan is revenue to the state, good job creation. It's my understanding these reinsurance companies will have employees in Wyoming, and such as in-state regulators and other personnel, and we'll continue to learn more about this industry. And I guess to kind of sum it up, a few examples, and these aren't all directly related to blockchain, but they're related to the three titles in this committee. And I've spoken with Wendy Lopez. Just pretty recently, some of the recruitments that fall within digital innovation in general and have stemmed from the publicity Wyoming has received from legislation the past few years include, in addition to the Speedy Banks in development, VMAXL, HEPA Vault, Herd Dog, which is an ag technology company, Exploration Institute, and Elite Mining. I would mention Elite Mining. This is a company in the process of moving to Cheyenne from Seattle. They're purchasing the old Habitat for Humanity building and will be doing manufacturing of their state-of-the-art crypto mining mobile pods. So when you look at the strategic plan and you look at blockchain, digital innovation, fintech, here we have a manufacturing component. And so they've not asked for assistance beyond, and most of these companies, they're not asking for funding, they're asking for networking assistance, whether it's to UW or utilities or workforce recruitment. This Elite Mining is going to need welders. And they're developing immersion technology for a mobile unit that can be deployed to power sources anywhere. So those are some examples. Much remains to be seen on this specific topic, and it's not our role to weigh in exactly really on the draft bill, but we will be watching closely and making sure that we're there to provide that networking and technical assistance, work with our partners, whether it's local economic developers or university or utilities or what have you, workforce services. And so with that, I would welcome any questions if there are any, and hopefully kind of provided how legislation is meeting state economic development strategic plan, and we're executing and getting some wins in Wyoming and building this ecosystem.
Questions for the Business Council? No? Well, we really appreciate it. Especially appreciate your comments about the industry growth in Wyoming. And I think we just have to keep plugging away on that and helping. I think there is a disconnect in Wyoming between a lot of our citizenry seeing those effects and understanding that there is growth and it does take time, but so I really appreciate you bringing all that to light.
You bet. Thank you.
All right. Let's jump to the legislation. We'll circle back to the commissioner after the legislation, get all of his kind of final thoughts on things we've been talking about, as well as I know he gave us some introductory to the bill, but LSO is going to walk us through that bill. And just as to preface it, this is drafted really broad intentionally. So for our listeners and viewers out there, they understand that we're starting broad and determining if and how we narrow it, right?
That's correct, Mr.
We've done some narrowing, it sounds like. Or
Not
those
in
are
this
just
draft.
those are just preliminary conversations that we've had with the commissioner. Okay.
That's correct.
All right. Go ahead, David.
Thank you, Mr. Chairman. David Hopkinson, Staff Attorney with the Legislative Service Office. Here to present what's titled as Informal Draft B 0.04, just to make sure we're all looking at the same copy. As was mentioned, this has been drafted as broadly as possible. Essentially, it would waive just about every requirement within all of the existing chapters of Title 26. So essentially, anything related to insurance could potentially be waived. Looking through the bill draft, it creates a new chapter, Chapter 55, creating the insurance sandbox. On page 2, there's just a staff comment with kind of a brief note to the committee that given the complexity of this, we can't say for sure the effect it's going to have, and a lot's going to depend on ultimately what is decided to be included within the sandbox. The first section there, 101, creates the title Insurance Sandbox Act. 102 provides the definitions over on page 3. We have definition for consumer, which does limit this to someone in Wyoming who would purchase or enter into an agreement for an innovative insurance product or service. Innovative is defined there, essentially incorporating the idea that it needs to be a new idea or emerging technology or an existing technology used in a new way. Insurance product or service references essentially whatever is going to be included in the insurance sandbox is an insurance product or service. Insurance sandbox refers to the program created by this chapter. And on page 4, sandbox period is simply the allowed amount of time, the initial amount of time that would be allowed of 24 months for participation within the sandbox. The numbers that the committee will see here, and as was previously mentioned, this is modeled after the financial technology sandbox. So the numbers, the amounts you're going to see in here, there's no magic to them. They're simply what was in the financial technology sandbox. So the committee will definitely want to consider the appropriateness of any of those amounts, including this 24-month period. New section 103. This would be essentially the core of the sandbox. It provides that notwithstanding any other provision of law, a person who makes an innovative product, insurance product or service available may be granted a waiver of certain requirements imposed by statute or rule if those statutes or rules do not currently permit that product to be provided. And that waiver shall be no broader than is necessary to accomplish the purposes and standards set forth in this act. And that is all as determined by the insurance commissioner. Over on page 5, we see what would specifically be allowed to be waived. And that goes through, for your reference, those are simply the chapter headings because we're waiving entire chapters at a time. And what's in brackets and in italics there are those chapter titles. And you see that starting on page 5 and going through page 11. The bottom of page 11, there's a staff comment just making some notes for the committee to be aware of, including that depending on what is provided within or what is ultimately determined to be waived, there may be some additional amendments that need to be made to the bill or to current statute based on that. A note there that this was drafted as broadly as possible. So
I did want to ask a quick question on the staff comment 1. Did we go back through on the financial technology sandbox and add additional language to the chapters that were allowed for consideration under the sandbox, like the staff comment one suggests?
To a number of them, we did.
To a
yes.
number, and what sort of governs the whether we should or shouldn't be adding those language or that language?
Mr. Chairman, ultimately, it's kind of a judgment call on whether or not that would be providing sufficient notice of what's being amended, and making any conforming amendments that might need to be made as well.
Gotcha. Thank you.
And then I'll jump down to paragraph 4 on page 12 of the staff comment. Here is where I've made note of what, in my conversations with the Department of Insurance, they had specifically asked that the committee consider be removed from the bill due to those NAIC accreditation considerations. And so those sections and paragraphs are outlined there. Section B provides that a person who makes that innovative insurance product or service available notes that they are not immune from civil damages for acts and omissions relating to this chapter. In other words, for acts or omissions relating to this sandbox, and that they are subject to all criminal and consumer protection laws. So this doesn't waive consumer protection laws for them. C on page 13 provides that if necessary, the commissioner can refer suspected violations of law to the necessary federal or state prosecuting entity for investigation. D provides that if service of process on a person is no longer realistically viable, that they can serve the Secretary of State, and that should be deemed service of process on the person. And E, here I think provides an important limitation. It provides that no waiver or element of waiver shall be granted if it would jeopardize the state's NAIC accreditation. Section 104, subsection A at the bottom of page 13 provides that when the person makes that application, that they shall specify what rule or statute they are seeking waiver of and why they need that waiver, and why those requirements would prohibit them from providing the service or product that they want to provide. And the commissioner shall prescribe rules for the application and the method of application. Subsection B provides that a business entity making application under this section shall be a licensed domestic corporation. In addition to shall have another physical presence inside the state outside of just simply a registered office or agent. C provides that a person who applies on behalf of that business entity shall first have the permission of the business entity. D provides that a person submitting an application under the section or who are substantially involved in that application requires a criminal background check. E would require an application fee of $500. Again, we've heard testimony that amount is likely grossly inadequate. But it also establishes that nothing in the chapter will confer a right or should be considered as conferring a right or privilege that the person can provide an insurance product or service under this act, or any right that a specific fee or statute will be waived. Subsection F provides that the commissioner shall grant or deny an insurance sandbox application within 90 days. Again, that number may be insufficient. But that's what's currently in the draft. Provides that over on page 16, that in determining whether or not to grant or deny an application, the commissioner will consider the following, including the nature of the innovative insurance product, the potential risk to consumers, the business plan of the company, and whether that person has the necessary personnel financial and technical expertise to provide the product or service. And whether any person substantially involved in providing that product or service is currently under any sort of investigation for fraud, state or federal insurance violations, or any property-based offenses. They must provide a copy of the disclosures required under Wyoming Statute 2655-106C, which we'll see here in a moment, and essentially any other factors that the insurance commissioner determines are relevant. Subsection G provides that if an application is granted under the previous subsection, that the commissioner shall specify what statutes, what rules will be waived or portions that will be waived, and the length of the initial sandbox act or sandbox period consistent with that defined sandbox period previously seen. And that they shall provide a summary on the Department of Insurance website of that product or service. Subsection 8, bottom of page 17, provides that the person authorized under that subsection to participate in the insurance sandbox shall post a consumer protection bond. Currently, the draft requires not less than $10,000, but that amount shall be determined by the commissioner and should be commensurate with the risk profile of the insurance product or service. And that the commissioner may increase or require an increase in the bond amount at any time, again, based on the risk profile. And that the commissioner has or shall allow the bond to be canceled or expired not later than 2 years following the date of the conclusion of the sandbox period, unless the bond is being enforced under a statute that we'll see in a moment. Subsection J provides that a person authorized to participate in the sandbox shall be deemed to possess an appropriate license. This is one section I would note that the Department of Insurance has requested be removed from the bill for those NAIC considerations. And subsection K provides that authorization under the previous subsection F shall not be construed to create any kind of property right. Section 105 creates an insurance sandbox account. This would create where those fees would be sent to, and that the funding for the program would be provided out of those fees, and that subject to legislative appropriation, those funds would be deposited in this account and reinvested by the, as we typically see, by the treasurer. I think that language is up there in subsection A. And that they shall only be used for purposes of administering this act, the Insurance Sandbox Act. 106 provides for operation of the insurance sandbox and provides that a person may make an innovative insurance sandbox or available insurance product only during the sandbox period. That it provides that the commissioner may specify the maximum amount of consumers permitted to receive that insurance product or service, the innovative insurance product or service, in consultation with that person. Moving over to page 20, subsection C, before a consumer purchases or enters into an agreement to receive an innovative product or service, that the person making that service available shall provide a written statement to that consumer that the name and contact information of the person providing that product or service shall notify them that the product or service has been authorized to be made available for a temporary period by the commissioner, that the state of Wyoming does not endorse the product or service and is not subject to liability for losses or damages caused by the product or service. Paragraph 4 on page 21, that the product or service is undergoing testing, may not function as intended, and may entail financial risk. That the person making the product or service available is not immune from civil liability for any losses or damages caused by that product or service. She'll notify them of the expected end date of the sandbox period and the name and contact information of the insurance commissioner, and notification that suspected legal violations or other complaints should be referred to the commissioner. And she'll include any other statements or disclosures that the insurance commissioner deems necessary. Subsection D, a person authorized to make an innovative insurance product or service available shall maintain comprehensive records. So it requires comprehensive records be maintained and that those records be kept for not less than 5 years following the conclusion of the sandbox period. And the commissioner may make further record keeping requirements. The subsection E on page 22, the commissioner may examine the records that are required to be maintained at any time with or without notice, that any and all direct and indirect costs of that examination shall be paid by the person making that innovative insurance product or service available, and that the records maintained under this section shall be confidential and not subject to disclosure under the Wyoming Public Records Act, but may be released for the purposes of any state or federal agency for purposes of investigation. Subsection F provides that not less than 30 days before the conclusion of the sandbox period, the person may request or shall provide written notification to the consumers of the conclusion of that sandbox period and shall not make that product or service available to any others after the conclusion of the sandbox period until legal authority outside of the sandbox exists to make that product or service available to consumers. And that person shall wind down operations with existing consumers within 60 days following the conclusion of the sandbox period, except that even after those 60 days, they still may collect and receive money owed to the person, take necessary legal action, or take other actions authorized by the commissioner that are not inconsistent with this subsection. Subsection G, the bottom of page 23, provides that the commissioner may enter into agreements with state, federal, or other foreign regulatory agencies to allow a person making an innovative insurance product or service available in Wyoming through the insurance sandbox to make those products available in other jurisdictions if they have similar insurance sandboxes there. And under the same standards that are provided for in Wyoming. Section 107 provides for the revocation or suspension of an insurance sandbox authorization. Subsection A provides that the commissioner may order, revoke, or suspend authorization if the person has violated or refused to comply with any with this chapter or any lawful rule, order, or decision by the commissioner. If a fact or condition exists that if it had been known that it existed at the time of the insurance application, that it would have warranted denial of that application or the imposition of material conditions. If there was a material error, false statement, misrepresentation, or omission made in the application. If continued authorization or authorized waiver of a statute or rule would jeopardize the state of Wyoming's NAIC accreditation, or if after consultation with the person, continued testing of the product or service would be likely to harm consumers or no longer serves the purposes of the financial technology the insurance sandbox. Subsection B on page 25 requires that written notification of that revocation or suspension be made under subsection A, be served using any means authorized by law. And if the notice relates to a suspension, that the commissioner should include any conditions or remedial actions that shall be completed prior to that suspension being lifted. Section 108 provides for the extension of that sandbox period, that initial 24 months. Subsection A provides that they may be extended for an additional 12 months, but that application shall be made for extension not later than 60 days before the conclusion of the initial sandbox period, specified by the commissioner, that the commissioner would then have not later than 35 days to approve or deny the application for an extension. And the application for extension shall cite one of these following reasons as the basis for the application and shall provide all relevant supporting information that the statutory or rule amendments are necessary to conduct business in Wyoming on a permanent basis, or that an application for a license or other authorization required to conduct business in Wyoming on a permanent basis has been filed with the appropriate office and is currently pending. On page 27, section 109 deals with the rules and orders, enforcement of bond, and the applicability of the Wyoming Administrative Procedure Act. Subsection A provides that the commissioner shall adopt rules to implement the act, and that those rules shall be as consistent as possible, but shall also account for differences in the wide variety of things that could potentially be waived. Subsection B provides that the commissioner may issue all necessary orders to enforce this act, including ordering the payment of restitution, and may enforce those orders in any court of competent jurisdiction. Provides that the commissioner may issue any order issued under that paragraph 1 to enforce a bond or a portion of the bond, and they may use the proceeds from that bond to offset losses suffered by consumers as a result of the innovative insurance product or service. And that subsection C, page 28, provides that all actions of the commissioner under this chapter shall be subject to the Wyoming Administrative Procedure Act. Section 2 is some conforming amendments providing for the background checks that we previously mentioned, and allowing for that criminal history record information to be provided for that basis of an application under the insurance sandbox. And we see those amendments, lines 16 and 17 on page 28 for 719-106, and then 719-201 is the same thing on page 29, lines 6 and 7. The amendment to section 26.3.102 would provide that a company providing a product or service under this Insurance Sandbox Act would not need a certificate unless that certificate is required by the commissioner. The staff comment there, just for the committee to note that the effective dates that are in this act are certainly were based on that financial technology sandbox, and certainly would potentially need to be changed. And we see those effective dates on the last page, page 30, provides that section 3 requires that the insurance commissioner would adopt rules prior to January 1st, 2023. But those rules would not take effect until January 1st, 2023. And section 4 for the effective dates that generally sections 3 and 4 that we see on that page would be effective immediately, but the remainder of the sections would not be effective until January 1st, 2023. And with that, I would stand for any questions on that.
Representative Stiff.
Mr. Chairman, thank you. Mr. Hopkinson, thank you very much for the review of that. I just want to get a sense for what this draft legislation does. It seems like it gives lots and lots of power to the insurance commissioner and requires the commissioner to make a decision within 90 days. And it seems like the insurance commissioner could approve pretty much anything. So if the insurance commissioner is really busy, say dealing completely unrelated with this migration of a large Bermuda reinsurer to Wyoming, and their staff's really busy with that, and there's an insurance application that I'm an auto insurer, and I'm going to offer people really cheap auto insurance because my insurance policy that I'm offering covers damage to left front fenders only, right? And so it's like $9 a month for your auto insurance, and I market it and sell it. This would allow the insurance commissioner to approve that, right? And if the insurance commissioner is busy, might just approve it because they don't have time to really scrutinize the application. I mean, can you give me an example of why this would be a good idea? I'm just really confused as to why we just cede all of the power to the insurance commissioner. I don't get that.
Probably because we want the left front fender insurers to just slip right in. There's a lack of them in the industry. If you can.
Mr. Chairman, thank you. Representative Stith.
I guess that's kind of more of a policy question, isn't it? I don't. Well, much of that is why we explained why it's broad. And there, you do have a staff note that, maybe we've delegated a little much to the commissioner, but I mean, those are policy questions for us to certainly decide.
Mr. Chairman, then let me narrow the question by saying, is it true that this draft gives the insurance commissioner the authority to essentially approve any kind of insurance project marketed to consumers.
Mr. Chairman, Representative Stith, the limitations that are in the bill, and I won't go into the policy because of course that is a question for the committee, but the limitations that are currently in the bill would prevent the insurance commissioner from approving something that would jeopardize the state's NAIC accreditation. That's one of the primary limitations. Some of the other limitations are that it would have to be a new product, that it would have to be prohibited currently by statute or rule. But yes, it does give broad discretion to the insurance commissioner on what he will or will not approve for an application.
Joel?
Thank you, Mr. Chairman. I have a similar question, but coming at it from a different direction, which is that I wonder if this sort of sandbox framework provides adequate enough incentive to move a multinational reinsurance company from Bermuda to onshore when there's a lack of clarity or perhaps incentive in place. Going back to Senator Nethercott's question to Mr. Brooks, it seems that there are some specific things that ought to be in place, such as the ability to match duration on assets and liabilities, et cetera, that I think without that clarity, that's a pretty big ask of a well-established multinational corporation with muscle memory of, you go to Bermuda when you do this. Well, we can go to Wyoming and experiment. I don't know the sandbox may be the best and only first step, but I don't know if that's enough incentive or clarity to move folks.
Thanks, Mr. Chairman. Yeah, I'll comment on that. I don't think that the insurance sandbox is sufficient for the reinsurance discussion. And I think that we will probably need to develop a piece of legislation that more directly targets the interests that we've discussed to achieve that. I think Mr. Reville is exactly right that you can't have a multi-billion-dollar product fit this program. And honestly, it probably is better suited to the left front fender type concepts, smaller things that can be tested. And that same thing we did with the financial technology sandbox. There was no way you were going to really test out a multi-billion-dollar entity. It was very much targeting the smaller innovative products that could work within a sandbox. I don't think reinsurance can be sandboxed and be reinsured.
Mm-hmm.
So we need to probably be thinking in two paths, Mr. Chairman and committee. One is addressing these interests of the reinsurance sandbox, which will probably take another, not sandbox, excuse me, reinsurance industry, and then contemplate that insurance is an incredibly large industry that has a lot of different facets and aspects that will be looking for innovative solutions that they can provide. And what would an appropriate sandbox look like that can allow that type of experimentation without threatening the consumers that we discussed. So this doesn't have to be the only solution that we're looking at, but the discussion of reinsurance really, I think, was what kickstarted this conversation. Well, maybe a sandbox is an appropriate solution, but I'm becoming less convinced personally that the sandbox works for reinsurance. I think we need different legislation, Mr. Chairman.
Yeah, I don't think that's too far off. I kind of alluded to that with the white page request, realizing we're now, we're probably dovetailing into something else with it. So I think I'm tracking with that too. And it sounds like the committee is as well, and the commissioner. Well, we haven't had his opinions on reinvestment necessarily, but certainly on this sandbox. Did you have a question, Representative Western?
Thank you, Mr. Chairman. Just out of curiosity, is there anybody in the audience that's from the insurance sector and not reinsurance? So it sounds like we've only really heard from the reinsurance industry. And
Oh, we do have, we have some public comment on Zoom from an insurance association.
Okay.
So a little bit, but I also know that she is interested in reinsurance. So
I guess a question for Mr. Hopkinson. Very much dovetailing on what Senator Rothfuss was just talking about. I'm not really seeing anything in this that talks specifically about the reinsurance component. And so is there anything in here that could be amended for the reinsurance industry?
Mr. Hopkinson.
Mr. Chairman, Representative Western, certainly those could be included to an extent. They likely already are, in the sense that this covers all of Title 26, all of the relevant portions of Title 26. And my recollection is reinsurance may be under Chapter 14, but don't quote me on that, but that would be already covered under this. So it's broad.
Representative Stitt.
Mr.
And then
Chair-
Senator Murphy.
Mr. Chairman, Mr. Hopkinson, at the top of page 4, line 4, it appears that this current draft on this insurance sandbox is limited to products made available to consumers. Is that your understanding?
Mr. Chairman, yes, it is limited to consumer, and the consumer definition that we see on page 3, paragraph 1, specifies that could be a person, a natural person, or legal entity in Wyoming. So they are limited to providing this product to people in Wyoming, except as otherwise provided further on in the bill if there's an insurance sandbox in another state with similar limitations that might be provided there.
Mr. Chairman,
Yeah.
and again, I'll note what Mr. Hopkinson said a while ago, which is this is based on the previous legislation. We wanted to make sure that the scope of banking technologies or business-related technologies was limited to consumers in the state of Wyoming, and that the products would only be made available in that scope, so that it was truly a sandbox and was not an open-ended international administration that then would have to be tracked effectively, because you'll see there's a lot of checking in and oversight that's supposed to take place. And if it is being deployed around the country or around the world, it's going to be a challenge, which honestly gets back to the fact that it would then be very difficult for a reinsurance industry. And Representative Western was noting this a few minutes ago, to have its consumers in the state of Wyoming only. Not to say it's impossible, but it would certainly be a challenge for that industry to make it work under that.
And well, it's not on our agenda today and tomorrow, but on our next agenda, one topic that the e-residency, I think, would throw an interesting, it would be an interesting addition to the concept of in Wyoming. Senator Murphy.
Thank you, Mr. Chairman. I'm a little confused, though, relating to consumers, as it says. And this is a 24-month project. What about long-term products, such as annuities, long-term care, et cetera? Once again, how are we going to protect the consumer that buys this product that may be innovative, et cetera, but maybe long-term duration, and the insurance commissioner may not be able to control that? I just wonder if there's thoughts on that. Thank you.
Yes, Senator Rothfuss.
Thanks, Mr. Chairman. I would think that's covered in the language that allows the insurance commissioner, if somebody brought a product that was a 10-year product, it would, according to this, be allowed to be offered for 2 years, but then conditions are available for the commissioner to set requirements. And there's a broad list of what those could be prior to approval. So you can imagine a circumstance where if somebody were bringing that type of product, that they would have to prove that it was sufficiently backed and surety was in place for that continuity. There might need to be, potentially I'd ask Mr. Hopkinson if it needs to be strengthened on the winding down discussion, because there might be a timeline of requirement on the winding down language. But I thought, let's see, the person shall wind down within 60 days after the conclusion of the sandbox period, accepted after the 60th days. The person may collect and receive money owed to the person based on agreement with consumers made before the conclusion of the sandbox period. Mr. Chairman, I guess I'd ask Mr. Hopkinson if he thinks it would cover that. I feel like it probably does. It gives the commissioner authority, as well as honestly giving the commissioner authority just not to grant the product if he doesn't feel that the consumers are protected.
Mr. Hopkinson.
Thank you, Mr. Chairman. I think long-term products, while they might be covered by this, that does get a little iffy, because I think the genesis where some of this is coming from was the notion that we'd provide this product or service and then change the rules or the statute so that they could continue providing this product or service. And then if we couldn't do that, we'd kill the product or service. So I don't think this really contemplates providing a service for 10 years, 20 years, 30 years without having that statute or rule change to accommodate it. I guess that's probably the best answer.
That's right. That's exactly right. That's the idea, is that we're testing the waters, and the applicant, go back to the original application. The applicant has to say what they're going to do and why they can't do it under the existing law, or why the existing law hampers their ability to do that. And so I think that's the whole idea of a sandbox, right? It goes back to the question, or to Senator Nethercott's question. What is your problem, and how do you, with the law, and what do you want to do, and how do we do it? Well, and maybe we don't have every possible industry stakeholder at the table at this moment. So as long as we narrow the universe enough, I think, and we have, and I think these are going to be small fish that are going to play. To Joel's point, I think that's probably true in any sandbox. Why would any successful, large, rooted company who has to live on an island pick up and move their company to Cheyenne, Wyoming? Maybe Jackson. Maybe that's comparable to an island. It is a type of island. Other questions on the legislation? No? All right. Thank you, Mr. Hopkinson. I think we only have one. Raise your hand if you're planning on commenting on anything we've talked about, whether it's Teton County or the actual topic. So I think I have one public comment on Zoom. So let's go ahead and let Ms. Wilkinson in, and then we can circle back to our commissioner, because that'll be the end of our public comment.
Good afternoon.
Welcome, Catherine. Welcome.
Thank you, Mr. Chairman, committee members. Can you hear me all right?
Yep.
Okay. Mr. Chairman, members of the committee, my name is Catherine Wilkinson. I'm here today representing American Property and Casualty Insurance Association, and just have a few narrow comments specifically to the insurance sandbox bill. Should the committee decide to go a different direction with reinsurance, we'll be following that conversation as well, but do have some comments on the draft in front of you. APCIA thinks that it is, as you have stated, written a little too broadly. In sections 26, 55, 103, we think that a lot of those, waiving those requirements would result in a very unlevel playing field, and in fact would ask that you exclude those from being allowed to be waived. And those specific sections that we would ask would be the authorization of insurers and general requirements, the fees and taxes, assets and liabilities, investments, administration of assets and liabilities, in addition to the other sections that were identified by the Department of Insurance. So we would just ask that those would actually be excluded from the waivers in order to create a level playing field. The only other comment I received from my client is also on page 13 with section 2655-104. Those licensees really, they do need to be licensed by the Department of Insurance, and the language is a little bit ambiguous over whether or not they do need to be licensed by the DOI. So we would ask that that language be cleared up. And then, Mr. Chairman, in regard to the rest of the language in the draft bill, it's very consistent with a lot of other insurance sandbox bills that are across the country. And if those fixes were to be amended into the bill, we would stand in support of it. So I would stand for any questions that I might be able to answer. Thank you, Mr. Chairman.
Ms. Wilkinson, do you have a response to Representative Stith's question? Who would we really be attracting?
Mr. Chairman, I can try to answer that. I am not as familiar with this topic. I'm still learning about it as well. But it's, I think, within the insurance industry of just any new and innovative products that could really help our consumers. And I think a sandbox is always a good idea, along with consumer protections, just to allow that innovation with that short duration. As to specifics as to who, I do not know, but I could get back to you on that. But the insurance industry is generally supportive of creating a sandbox environment.
Yeah, thank you. And I didn't mean to put you on the spot, but the reason why I ask you is because your boots are on the ground within the insurance industry. And I'm just curious. I mean, again, and this was mentioned earlier, this bill begins because of a conversation we had on reinsurance, is why we really are here with this bill. So I guess it didn't necessarily bubble up from inside specifically in general insurance industry, but I would be curious within your industry. I know I get the idea of innovative companies and innovative ideas. But I guess it would be nice to know exactly if there is. It's a little bit different because we understand we don't have necessarily the attractability for the reinsurance industry that we want, or attractability, I'm sorry. But I guess I'm now stuck on Representative Stith's question on trying to figure out who would we be attracting? I mean, I'm all for putting legislation out, build it and they will come. But so maybe if you could circle through your circles, and if you have something for us, it'd be helpful.
Mr. Chairman, I will absolutely do that and we'll be back in touch.
Other questions for Ms. Wilkinson? All right, thank you so much. All right, let's go back to Commissioner Rude. Bring us home, Commissioner Rude. I'm only 4 minutes over the time that I want to be, but if you, there's a lot that's been said, and certainly we want your opinions on anything that's been said. The bill, I know there were some questions asked that were probably better answered by your office, and if we need to repeat those, we certainly can. If you didn't keep score.
Yeah, Mr. Chairman, thank you. First, I guess I would say one of the nice things with working with Mr. Brooks and going through a reinsurance model and working with him is he's been able to answer our questions, and he's been able to talk with us and say, if we need experts, we could look over here for them in the future. And so we're actually learning as we go, and that's greatly appreciated because we know what we're dealing with then. My concern of the sandbox, the scary part is we don't know what we don't know. We can build it. We don't know who's going to come, but I will guarantee you some of them won't be the most reputable players. And to deal with them, I'm going to need resources. And that's something we were able to work through with Mr. Brooks. For concerns on the bill itself, I would leave that to Ms. Johnson if you want to work through those, if we don't have time. But that's who I'd deflect those to. There were a couple of outstanding questions. I'll just really briefly get to. I had a couple of them that I remember, Mr. Chairman. One was from Representative Western about accreditation. Just very briefly, it's sort of the gold standard of what we do. It allows other states and nations to look at our work here in Wyoming and have confidence that it was done correctly and they can rely upon it. So for example, we have one domestic insurer in our state who also sells products in Colorado and Montana. If we're not accredited, not only will we continue to examine them for compliance with our state statute, but Montana would have to also do it, and so would Colorado. And these exams are multi-month long exams, and they're costly and they're hard. And so you really don't want to lose that accreditation standard. It's very important. We look at everything. We have to examine these companies not once every 5 years. We look at their IT to make sure it's sound. We look at their assets, their liabilities. We want to be sure that there's sufficient funds there. And we look to their board of directors to see if they're qualified, are they doing their job, that sort of thing. But it's a quite extensive requirement for accreditation. I think there was another question Senator Rothfuss brought up on the funding model, and I think there was two things we've talked about here with Mr. Brooks, and one is a very, very large upfront fee. The other thing that we may have to do in conjunction with it, or if there's the sandbox legislation goes forward, increase our budget in our 900 series by say $1 million, where we would have it sitting there when needed to hire experts. And I don't come up with $1 million lightly, but right now I know what my examiners are paid, and we could not lure someone to come here and with this specialty to Wyoming unless we paid them 3 times that at least. And that's money that we wouldn't have to use if we didn't need it, but it would be there if we did need to hire experts. Because once again, I don't know who's going to come through the door of the sandbox. And while I can work with Mr. Brooks on the reinsurance and sort of learn as we go and ask questions and get feedback, if I get 5 applications tomorrow and they're all dealing with something completely different, I'm going to have to find experts in all of those areas. And so there might have been other questions. I'm happy to sit and answer them.
Well, thankfully, no one's getting 5 applications tomorrow because we're not in session until February. And I'm a recovering appropriator. So the 900 series $1 million appropriation, that's more of a representative stiff heartburn question than heartburn for me. Representative Yin.
Thank you, Mr. Chairman. So Commissioner, I have a couple questions, and I think you basically helped answer one of them, which is what is the administrative cost going to be? Because I'm guessing Bermuda regulators, their budget is much higher than our budget for your department. So one, would that cost be able to, so even if we put in the ability to put some upfront money, would that cost end up being able to be covered by high upfront fees proposed by Mr. Brooks? And 2, have you talked with other insurance commissioners in your organization at AIC with respect to are other states trying to do the same thing, and how far along are they?
Mr. Chairman, can I follow up?
Yeah, please.
Buying you time, Commissioner Rude. Commissioner Rude, isn't it true that the Department of Insurance is self-funding and is in the black?
Mr. Chairman, Senator Nethercutt, Representative Ian, yes, we are in the black. When I asked for $1 million increase in a 900 series, that would be assessed to all the insurers that do business in this state. And if the money isn't used, it sits there, and then we can either reassess if we turn it back, but actually our assessments would just go down if we didn't ever use it. So it wouldn't be a cost to the state when I throw out the $1 million figure. To your point, Representative Yin, concerning Bermuda, they have the fees that they have, but they already have a staff in place with experts in place, and we don't have any. And so it's been great to work with Mr. Brooks and where we're identifying experts and talking about hey, we might be able, if they use these people, here's people that are completely independent that we could use, and we can vet them with other states that use them to make sure they're truly independent and would be there for us. But as for costs, we might have to do both of these in conjunction with one another. So we have a little seed money up front. You can have a higher application fee, or you could have an application fee and then an additional processing fee, or however you want to do it, for if we don't at first glance reject an application. But in any event, we still have that 90-day window, which really is scary for me, because we'll just never get them done in time if there's more than one. It just won't happen. And so we'd have to have the ability to say, we've got your application, we're going to hold it over here, and we'll get back to you. If you want to withdraw it and your money's returned, fine. And you want to resubmit it later, great. But if not, we'll just put it in the hopper and we'll get to it next when we can in the order that they come in.
And Commissioner Root, I think your points are well made, and I think the committee has well received the idea that, yes, if we were to pass legislation on this, of course your office isn't financially equipped to move on that. But and I don't know that this is the next big idea, but it may be. But I mean, that's part of what I think we have to really explore is what it goes all the way back to Joel's question is really where it's at, which is what percentage of that market are we going to capture? What is it that we can honestly capture? And I think if we have an honest understanding of what we could capture, we have a pretty darn good honest understanding of when we assess those fees on an AUM, what they look like. And I just think back to our banking division when we started that entire adventure with the special purpose depository institutions. They didn't have the staff, they didn't have the experts. That was a reality with our banking division too. And now they're traveling all over the country. It's all they do. Just don't steal our attorney who drafts the bill. That would be my only request out the gates is whoever drafts our reinsurance bill, let's maybe not steal them. But so your point's well received, and we get that. And I think we'll have a better understanding of what your office would actually need when we have a better understanding of who we're attracting and how what is our actual potential to bring them into Wyoming. Representative Western.
Thank you, Mr. Chairman. Mr. Root, I know that we're at the very beginning of these discussions and trying to refine it where we want to go with it, but I know you've had consultations with Mr. Brooks. Based on what you know now, do you have any idea of the type of staff or how much staff you're going to need to bring on and how long that process would take? Because I think making sure you've got really good staff in place to evaluate these applicants and the breadth of the type of insurance products that they might be wanting to test out. So do you have any idea of what that staff would look like, how many, how long it would take to assemble the type of team you need?
Mr. Chairman, Representative Western, staff is hard. To get people here is hard. For me to find a financial examiner, I'm trying to poach them from other states, basically, and it takes many, many months. And that's working within the guidelines and the salary cap that HR imposes upon us. This would have to go beyond that. We'd have to have some sort of, if we were trying to lure someone here to actually work in my office. That's why in some ways the hiring of the experts using the 900 series funds is actually a little more realistic, I think. Talking with Mr. Brooks, the $1 million upfront fee isn't surprising to me for an application. It just isn't. That's why I would say we might want to do something in conjunction with that on our own. So we still have, because it's a chicken or egg concept. I mean, if Mr. Brooks comes here with his $1 million, well, it takes me a while to find those experts. I've worked with him, so I think we can line them up quickly. It might just take a matter of weeks or months, but I'd still have to have the money available to use. And so we might need the seed money elsewhere, I guess, at least up front. But for me to know how much, I really couldn't tell you. I really can't. I just know what they do in Bermuda, and their staff is much larger than ours and paid much better. So.
Senator Nethercott.
Thank you, Mr. Chairman. Commissioner Rude, how much does the Department of Insurance generate in fees and revenues annually?
Mr. Chairman, Senator Nethercutt, approximately $23 million a year. And our budget is approximately a little over 3.1 million, 3.2, which is then, like I said, it comes from assessments on insurance companies.
Thank you.
Oh, Representative Yin, go ahead.
Thank you, Mr. Chairman. So just one more question for you, Commissioner. Do you think, I honestly, I'm not sure if the sandbox is the right way to go for us too. And so do you think it would make more sense if we had just enabling legislation for specifically reinsurance for whatever specific regulatory changes that we'd have to make to attract these insurers versus the sandbox strategy that we're presented with today, Mr. Chairman?
Mr. Chairman, Representative Yin, I really like working on this model with Mr. Brooks. If it works and we can attract several here, I would love to be specialized in this market, because I know once I have my experts and staff, I know I will do it well. With the sandbox, I'm a little more leery because I just don't know which direction something's going to come in on with an application. I've had preliminary discussions with other innovators out there involving, blockchain and Bitcoin, but we've never gone beyond the first or second meeting. But I do know they are in completely different directions than what we're talking about with reinsurance.
And it sounds like the only other piece that enabling legislation would need is a $1 million transfer from the Secretary of State's office that it generates from fees off of limited liability companies into the insurance fund. 900 series. That would be popular. I'm just seeing if the Secretary of State's office is listening. Yeah. Any other questions for the commissioner? Nope. All right. Thank you so much, Commissioner Root. It looks like we're narrowing this down into something that I think we can, it sounds like we're all pretty much in agreement that this is definitely not the vehicle for reinsurance. We may be interested in another vehicle for reinsurance, and we just need to build that vehicle.
Take a break and come back.
Yep. We'll go ahead and take a 10-minute break. Be back at 10:30. Are we live? Clarissa, thank you. All right, well, welcome back. We took a little liberty on our time there. So I know I said 10:30 and now it's 10:45, but no, it's still early and we're getting woke up here.
Mr. Chairman,
Please.
before we go on
Before we go to the next topic.
before we go to the next topic, with the insurance sandbox, I don't know that we need any more testimony, but I think what we probably need to do if committee is amenable and see if there's any objections or concerns, but it seems like we need to get started on a second piece of legislation that's specific to reinsurance, addresses those issues, and try to have that in order if we possibly can for the September meeting, although I know that that's pretty compressed and it would take some work between the commissioner and Mr. Brooks and stakeholders to be ready with a draft by then. But I think that's what we should be aspiring to there. And then with the insurance sandbox legislation, I think we had some good discussion today. Try to scale it back so that it makes sure we're not threatening our NAICS codes and ensure that it does what it's supposed to do, which is sort of the smaller projects that aren't, the global reinsurance market, but are innovative products and properly reflects that. So that's what I see as the path forward. And I'd see if anyone on the committee has any concerns about that before I move forward.
I see lots of heads nodding. I think that's the path forward. I guess the commissioner's already gone.
So he thinks it's a great idea.
So he thinks it's a great idea, and he likes the timeline. I think that's my that's my biggest concern is the timeline. But I guess we just have to. I know Mr. Brooks moves at the speed of light. That's how the private sector works. But we'll marry those two worlds together. I think LSO, particularly on this committee, is used to moving really fast and turning big bills around really fast. And I know David is amazing at that. So I think we'll put it all together and we'll get with the commissioner. And between now and Laramie, we'll have a solid bill on. Well, that'll be our goal.
Mhm.
Then okay, Representative Western.
Thank you, Mr. Chairman. And I wholeheartedly agree. And I think we just have to emphasize that whatever draft that we do have, it touches on some of the stuff that we've talked about, making sure that does this draft really create the regulatory incentives to get these people who reinsure, who have balance sheets that are 10, 11, 12 figures, even some of them, for them to really say, okay, this is the draft we're looking at, this is the regulation. We're willing to go through all that process of shifting all this stuff, even if it's only a couple of folks to Wyoming, and that those regulatory incentives are there and they're structured in a way that really does catch their attention and make them want to initiate that process, both in time, money, and effort and headache and all that other stuff. So that's my only thing I think we have to really keep in mind, is making sure that's drafted with that specifically in mind. So thank you, Mr. Chairman.
All right. Love it. Okay, so we're going to move on to our next topic, which is a review of other states' blockchain legislation. This is a age-old one that we put on our interim agenda because it's always fun to see all the amazing things Wyoming has done and what the rest of the country tries to do to catch up to us, which is really what the title of this topic is catching up to Wyoming. So Elliot, you're welcome. You're new to the staffing the blockchain committee, right? For the interim. This is our first interim with you. So welcome to staffing the greatest committee in the Wyoming legislature. In the history of the Wyoming legislature. Elliot, take it away.
Thank you, Mr. Chairman. I look forward to working with you all. My name is Elliot Browning, and I'm a staff attorney for the Legislative Service Office. And as Chairman Olson just referenced, I'll be presenting an overview of recently introduced and enacted state legislation from other states that relates to blockchain. And like the good chairman said, this will look to a certain extent like a highlight reel of what Wyoming has done and how other states have copied it in many ways. Just some introductory remarks. This list that I compiled isn't intended to be an exhaustive list of every possible bill that's been introduced or passed in another state, but rather to be more exemplary of the types of bills that other states are considering, in particular, calling attention to some of the ones that states were trying to publicize or prioritize. And the information that I got this from comes primarily from the National Conference of State Legislatures. They do a lot of work compiling legislation from different states, and they have a couple different categories they post. Some of these have to do with blockchain generally, and some are more cryptocurrency specific. And then I should have mentioned this earlier for anyone who's following along. This is agenda item 4-01. So to start, the first topic of interest has to do with cryptocurrency mining. So I'm sure you're all familiar with it, but in the general sense, cryptocurrency mining refers to the process by which new cryptocurrencies are minted or created. It involves a really, essentially like high level, involves solving a complex computational puzzle that requires a tremendous amount of energy, essentially, to do. So states are recognizing the economic benefits of encouraging crypto mining to be happening in their states, but they're also recognizing that there is this significant environmental cost with continuing to encourage this sort of practice. So
hopefully Mr. Musk wasn't listening to that. Might see some more tweets and some change in the valuation of Bitcoin. Go ahead.
So at a high level, I've pulled out 2 states that have either introduced or passed legislation to address cryptocurrency mining. Broadly speaking, it reflects 2 different approaches. One is to prioritize the environmental concern and restrict the practice of cryptocurrency mining pending some sort of environmental review. And that's the approach that New York has taken. On the other hand, states are trying to encourage this sort of economic development activity within their states. So they are providing tax incentives to individuals and entities who are interested in coming to the state and engaging in cryptocurrency mining. Moving on to blockchain and corporations. This is obviously an area this committee has acted in a number of ways. Just to name a few, the corporate stock certificate tokens from 2019, the DAO bill from the last legislative session are among those that Wyoming has been a leader on. But just to call your attention to the actions of a couple other states, New Jersey is now permitting corporations to use blockchain for certain record keeping. California previously had allowed this practice to happen on a temporary basis, and they've got legislation introduced, which will essentially make this permanent. And then the last item in this section, South Carolina, they've essentially replicated the bill that Wyoming did, allowing corporations to issue their token certificates. Moving on, and on a related point, I just threw in Ohio here. Ohio has allowed governmental entities, similar to how other states are allowing corporations to use blockchain or distributed ledger technology for their record keeping. Moving on to the next topic here, we've got the financial technology sandbox. Surely that will sound familiar to everyone on the committee. That's obviously something Wyoming has already passed. Connecticut is doing it again. Florida is amending their already existing program. Next, and this is certainly a list that's not exhaustive, because there are a number of states who are making these sorts of changes, Wyoming included. Last session, we had the digital assets amendments bill, which was passed, but a number of states are amending their sort of uniform laws related to property and contract law with respect to the inclusion of digital assets. Next, I thought this was just a fairly interesting and unique effort that was introduced into the Florida legislature. This has to do essentially with creating a pilot program to somehow utilize blockchain to connect food producers with food businesses in a food desert. Candidly, I don't know much about how the actual blockchain technology works in making those connections, but I just thought it was a really novel and unique approach to using this sort of technology. Moving on, voting. I'm sure you've had discussions about this or read articles related to blockchain and its potential to help with voter verification and that sort of thing. I would characterize the state of the voting proposals is that no states really gung ho about like, oh yeah, I'm sold on blockchain. I'm going to pursue this policy. But rather, it seems like states are starting to kind of like dip their toe in the water and get a sense for for essentially whether this is a viable strategy to work with voting. So in South Carolina, they've got a study committee to address whether this is going to be a feasible technology. Similarly, in New York, this legislation directs the State Board of Education to study and evaluate this sort of thing. Next, move on to the Uniform Money Services Act heading. This is similar to the digital assets and property law point. This is an area where a lot of states are simply amending their uniform statutes to include digital currency. And then lastly, on this document I submitted, I just highlighted a number of other states, again, quite similar to Wyoming. We're obviously already, this committee is obviously already well into its existence, but other states are seeing the potential promise of blockchain and other different digital innovation technologies and are starting to form their own working groups, subcommittees, and task forces to start addressing these issues. And then lastly, this is not included on my prepared document here, but I did want to call your attention to two sort of honorable mention legislative areas. There are also, see Nick from the Division of Banking can probably comment more on the specifics of some of these, but a number of states are either enacting or introducing legislation related to special purpose depository institutions and custodial services for digital assets. And with that, I would be happy to stand for any questions.
Mr. Chairman?
Yes, Senator, please.
Thanks, Mr. Chairman. So, Mr. Browning, I'm not seeing anything here that really strikes me as something that we would need to address. There doesn't seem to be anything that we haven't already tackled or is in the same area of work that we've done. Is that a fair assessment based on what we have here?
Yeah, I think that's a really fair assessment. Perhaps cryptocurrency mining, there's some like different, maybe different routes than what Wyoming's considered previously. But I think it's a fair assessment that Wyoming is indeed a leader in this space and has indeed led the way in a number of these legislative areas.
Great,
Because you don't want to explore a voting
well,
verification system?
Actually, Mr. Chairman, yeah, I was contemplating the voting and actually cryptocurrency mining is a good one that we were contemplating, looking at some ideas there for next time. So those are areas with the voting. If the committee is interested in taking a look at it at some point, we certainly can do that. I think there are some upsides to the verification side, the strict blockchain voting. I haven't seen any technologies yet that are quite ready for prime time, but that doesn't mean they're not out there. So it's an interesting topic, certainly.
Mm-hmm.
Joel. Thank you, Mr. Chairman. Mr. Browning, are you aware of any states having contemplated appending their uniform commercial code as Wyoming has?
Mr. Browning?
Yes, I believe other states are. Let's see. Idaho, under the digital assets and property / contract law bullet point, they are considering amending the uniform commercial code in a similar way.
So follow up if I may.
Oh, yeah.
Yeah, I wanted to speak to the crypto mining comment from Senator Rothfuss, which I believe we have on the agenda for the next meeting, if I'm not mistaken, but I'm looking forward to that conversation. I think Texas is already, the private sector is leading this, but Texas, there are already private sector enterprises there capturing natural gas flares to mine crypto in the Permian Basin. And I think between natural gas flares as well as our solar and wind sort of stranded energy sources here in Wyoming, this will be an interesting opportunity for us. Thank you, Mr. Chairman.
Yeah, I think it's going to be an interesting discussion as states move backwards in the way that they regulate cryptocurrency mining, states like New York that are backwards thinking and states like Wyoming that are forward thinking. On that subject, I think there's a real potential for Wyoming to capture a market that's being lost from overregulation. Joe?
Thank you, Mr. Chairman. And to build on that, with the increased scrutiny around dirty energy in quotes, the ability to mine crypto using renewable sources or in ways where you're flaring gas that would otherwise be going into the environment. I think that Wyoming is actually in a position to do something there on the renewable side too, which is out in front of a lot of what we're reading in the headlines right now.
Exactly. Yep. I think you're exactly right. So is that on our agenda for tomorrow? Is that
No, for next meeting.
for next meeting? Okay. All right. Very good. Other questions, committee? No? All right. Well, thanks for the update. We appreciate it. Of course, there's a lot more in the universe that's ongoing. These are the updates since the last time we were updated, I suppose is the way to think about it. There's obviously a lot more occurring. I think it's cute that Hawaii, Nevada, Arizona, and Texas thought it was a good idea to have a working group on blockchain.
Well, at least to talk about having a work.
Yeah. Good job, guys, in Texas. House Bill 2199. All right. Next topic. Now we're moving into our Division of Banking update. And I know we've got quite a bit of time set aside for this before and after lunch, but in visiting with Nick, who's the new general counsel for the Wyoming Division of Banking, it looks like we may actually be able to get through all of that potentially before lunch, which would allow for just a slightly longer lunch, which Representative Yin would really appreciate. Yeah. All right. Nick, welcome.
Thank you, Mr. Chairman. To introduce myself, my name is Nick Rochadle. I am the General Counsel at the Division of Banking. Some of you I have met before, some of you are new faces to me. It is a pleasure to be here. It's a pleasure to have this opportunity to present before you. I look forward to working with all of you going into the future. What I would like to talk about today is really four things I would like to cover. One is the banking division's preparation for supervising and examining our special purpose depository institutions and the progress that we've made there. The second topic I intend to cover is the banking division's work over the past few months to support the legal framework that we have in Wyoming for digital assets and our special purpose depository institutions, or also known as SPDIs. The third topic I'll touch on is just the status of our current SPDIs and anticipated SPDIs. And then the fourth topic, I know it's of interest to this committee to learn more about developments in digital assets and banking nationally. So I will cover the developments nationally and in particular how those relate to Wyoming and our SPDI banks or digital asset laws. So with that, I think I will just jump into the first topic, the banking division's preparation to supervise our special purpose depository institutions. Here, there's three things I'd like to highlight that we are working on or have been working on. First is our examination manual. We have prepared an examination manual that is based on existing bank examination manuals, but layers on top digital asset examination procedures. We've used 35 plus sources of guidance from federal and state regulators, even internationally, to build that digital asset piece on top of existing examination manuals. We have contracted with Promontory Financial Group to build out that examination manual. Examination manual is now complete. It's over 770 pages, so it's a little bit of a document. It covers the primary areas that need to be covered, including Bank Secrecy Act, anti-money laundering, OFAC compliance, custody and safekeeping, information security, and payment systems. That manual is now built out and has been a work of the Division of Banking for most of 2020 and into 2021. The second area that we are making progress on in terms of preparing to examine and supervise our speedy banks is our own training internally. Working with Promontory Financial Group, we have a intensive 3-day training. It's actually happening this week. That's why the commissioner is unable to be here, and you're stuck with me. That training covers all the pieces of our examination manual, including, again, BSA, AML, OFAC, custody, information security, and payment systems, as well as a half-day introduction to digital assets and how digital assets work. So that's happening this week, and that's a major step for our office to have our examiners go through that intensive training. And then the final area I would highlight as we prepare to supervise and examine our speedy institutions is on-chain analytics. Blockchain analytics is a tool that allows the user of a blockchain analytics platform to track digital assets as they move through a blockchain system. These are public systems, and so assets as they move around a blockchain, whether it be Bitcoin or Ethereum, can be tracked. There are several providers that provide blockchain analytics services. Our division will be using blockchain analytics as part of our supervision and examination process. We also require that our speedy banks use blockchain analytics in their own BSA, AML, and OFAC programs. Our staff, our examiners, have trained with the blockchain analytics firm Chain Analysis and to become certified on using those tools as part of our supervision regime. Those are the 3 areas I really wanted to highlight in terms of that first topic, our preparation to supervise speedy banks. With that, I think I'll shift to a second topic. What I'd like to do is just summarize some of the work we've done in the past few months to support the legal framework for speedy banks and digital assets. And there's a couple areas here. We have revised our rules in terms of both our digital asset custody rules and our speedy bank rules. We also testified at the hearing on House Bill 43, which was amendments to the digital asset statute. And then we have also coordinated with the Secretary of State's office as we have received inquiries about the DAO law that recently passed and was signed. So to start with the digital asset custody rules, we did revise those this year. They have been adopted and finalized. The digital asset custody rules are really clarifications. One area that we wanted to clarify in our own rules was the power. What if banks, speedy banks, provide custody under those rules? What are the powers that they can engage in? And so we added to those rules, for example, that our speedy banks or banks providing custody under those rules have the ability to engage in stablecoin networks and have the ability to participate in independent node verification networks. As we talk later in my remarks about national developments, we wanted to add pieces to the rules to ensure that our rules are on parity with what the Office of the Comptroller of Currency is allowing national banks to do. Speedy banks should be able to do the same. So that's one piece. We wanted to clarify some of the powers of our own speedy banks in the rules. We also, in a few spots in our digital asset rules, made changes to make the rules more technology neutral. So rather than prescribe and say, you must use this technology for a particular part of the business, given how fast paced this area moves, we don't want to lock people into a piece of technology that becomes outdated or is no longer industry best class. So there are pieces where we make the rule more technology neutral, but with the expectation that the technology our speedy banks use or banks providing digital asset custody is best in class in the industry. That's a second area, again, that we changed the digital asset rules on. On our speedy rules, we made several clarifications or additions to our speedy bank rules. One area is on the capital requirements for a speedy bank. We wanted to add more detail on the considerations that the commissioner undergoes in making a decision on what are the capital requirements for a special purpose depository institution. So we added additional rules on items he considers, the business activities of the bank, the risks associated with those business activities. If the bank is primarily a custody bank, the impact that that may have on the activities and risks and the capital requirements. For our speedy rules, we also added detail on supervising parent companies, parent holding companies. If there is a parent company of a speedy bank, we want the ability, and we've changed our rules to ensure that we do have the ability to look at the finances of the parent company, ensure that the parent company will be a source of strength for the actual speedy bank, and then give us the ability, if we so choose, to examine the parent company. We thought it was important that our rules reflect our ability to examine and gather information about any parent company of a speedy bank. Another area of changes in our speedy rules is the assets that a speedy bank can hold that backs fiat deposits. You probably all recall that a speedy bank must have 100% backing of the fiat deposits. We have narrowed the assets that a speedy bank can hold in that 100% backing. We have removed investment grade corporate bonds as an asset that could be held backing deposits. We have also removed gold and silver. The practical reality is that most of we expect that speedies will probably be holding mostly cash or treasuries backing the fiat deposits. So we've adjusted the rules to remove some of those other categories. Two final changes I'll highlight. We did add our own requirements on AML, Anti-Money Laundering, and Bank Secrecy Act requirements. These speedy banks already had to comply with federal law on BSA and AML. We wanted to reiterate what we expect to see when we look at our speedy banks, but these were things that speedy banks were already going to have to do. And then the final thing is we added a prohibition on what's referred to as narrow banking or pass-through banking, so that prohibition has been added. The idea with pass-through banking is that an institution would just hold funds at a master account with the Federal Reserve and then have deposit accounts with depositors. So they're trying to pass through the depositor money into a Federal Reserve account. So we've added a prohibition on that type of activity for a speedy bank. So those are the speedy rules. That two other topics I said I would address as we look at our support for the legal framework for digital assets and speedies is the digital asset statute was amended. We did testify at hearings related to those amendments. I just want to highlight two things, and many of you probably already know this about our digital asset statute, which is we did clarify the perfection of a security interest under our digital asset statute, meaning if a digital asset is considered, if it's virtual currency and considered money, we confirmed that it's possession that perfects that security interest. Whereas if a digital asset is considered a digital security and investment property, then that asset perfection of that asset would be via control. We clarified that issue. We also clarified the take-free rule that we have in our digital asset statute, or I should say by we, I should say you all clarified in the digital asset statute amendments, the take-free rule, that 2-year period after which a person would take free a digital security means that they only take free if they had no actual notice of an adverse claim on that asset at any time during the 2 years. So that was HB 43. And then the final area I mentioned was the Dow legislation. We do not administer the Dow law, but after the passage of that law, we did receive a number of inquiries just because of our role in the digital asset space in the state of Wyoming. We coordinated with the Secretary of State's office just to get basic information that we could pass along to people making inquiries, and then coordinate with them to refer those individuals or entities over to the Secretary of State's office where they could get more information. So that kind of wraps up the second area that I wanted to cover, which was our support of the legal framework.
Before we go on to the third and get too far down, and maybe there's more detail, but I think it's probably appropriate to ask it here. One of the early points into this second topic was related to clarifying our rules and regulations related to speedy banks to ensure that they were consistent with what the OCC was allowing through their recent changes. Can you elaborate a little bit more on how that affected the rules and regulations for speedy banks and as well as maybe a little more detail, I think, for committee members that might not be as familiar with OCC actions over the last year or so and the relevance of those, that would be helpful to clarify. Thank you, Mr. Chairman.
Thank you, Mr. Chairman. Thank you, Senator. The OCC, the Office of the Comptroller of Currency, regulates national banks. The OCC issued several interpretive letters under the prior administration. The first interpretive letter allowed national banks to custody digital assets. One of the other interpretive letters allows national banks to participate with stable coins as well as hold assets backing stable coins. The third OCC interpretive letter related to national banks participating in what the OCC refers to as independent node verification networks. A state bank based on Regal Neal, which is a federal law, should already have the ability to engage in other states in the same activities that national banks are allowed to do. Our goal or the purpose of amending those rules was just to confirm that those activities that the Office of the Comptroller of Currency has said a national bank can participate in, that our speedy banks can also do.
Now, with the OCC providing that authority from their perspective, has that been sufficient to allow nationally chartered banks to engage in those practices? Have any begun to participate in custody of digital assets or support of nodes or stable coins? Is that something that is currently going on?
Thank you, Mr. Chairman. Thank you, Senator. I should add that the OCC is, I don't want to speak for them. I would say there's been a change in administration. There's a new acting controller at the OCC. The new acting controller recently stated that that he had initiated a review of the prior OCC's action or OCC head's actions related to digital assets. So those interpretive letters that were previously issued. I have no special knowledge of what the OCC may do during that review or how that is impacting how national banks view whether they should or should not or can or cannot engage in the activities under the prior interpretive letter.
But currently, how many national banks have applied for under the OCC or are actually passed and in the approval status?
There are, thank you, Mr. Chairman. There are three, the OCC has granted conditionally approved 3 charters for institutions engaged in digital assets.
Joe.
Thank you, Mr. Chairman. I just question on that and maybe building on that to another action by the OCC with federal trust company charters to participants in the industry who I understand have the ability to call themselves a bank, though they are chartered not as a bank, but rather as a federal trust company. Are those the 3 that you were referring to, or is that something separate? Thank you, Mr. Chairman.
Thank you, Mr. Chairman. Thank you for the question. That is something separate from the three items that I previously identified. The three items I previously identified were focused on the particular activity. So the custody activity was one interpretive letter, stablecoin activity was another interpretive letter, and participation in independent node verification networks was the third interpretive letter.
Follow, please. I'm sorry, I didn't ask the question clearly. I meant that I thought you had just mentioned, I thought it was just mentioned, Mr. Chairman, that the OCC had approved participants as national banks. And my question was, are those the federal trust charters, or was there something in addition to that? Thank you, Mr. Chairman.
Thank you, Mr. Chairman. Thank you for the question. My understanding is that the most recent conditional approval was for a bank that would engage in only trust activities.
Thank you.
All right, please proceed.
Thank you, Mr. Chairman. The third category or topic I wanted to address is just the status of our speedy banks. And many of you probably, I'm sure you know, we have two speedies that have been chartered by the banking board. Those two institutions are currently building out their systems now. We have a third applicant who had a hearing earlier this month before the banking board for a speedy charter. The banking board will act on that charter application over the next couple months. We have a fourth speedy applicant who has a charter hearing at the end of this month. And then we continue to receive inquiries on a regular basis about our speedy charter, including from some large global entities. One thing I think is important to mention here is that, and I do want to talk a little bit more about this in the fourth topic, is that the Federal Reserve is currently evaluating its policy and has issued a request for comment on its policy regarding access to the payment system. When the Federal Reserve finalizes or provides more clarity around its policy related to access to the payment system, while I may be speculating some, we do think that has potential, that additional clarity from the Federal Reserve does have potential to increase the interest in the Speedy Bank Charter.
I just want to make sure I understood that right. So an action that the Federal Reserve may take will actually be beneficial.
If they take the right action.
Oh, okay. You don't have to answer that. Representative Western.
And just to make sure I understand correctly, that would be a master account, correct?
Thank you, Mr. Chairman. Yes.
Senator Ruffus.
And before we go on there, this gets back to my questions about the OCC nationally chartered banks. So those nationally chartered institutions, whether it's the bank or the trust, already have master account numbers, and they, through the OCC, were theoretically given an opportunity to custody digital assets. As I understand it, speedy banks are kind of going what to me seems like the appropriate approach, not circumventing the process, but going directly through the chartering process. And at this point in time, we're awaiting the master account numbers and approval by the Federal Reserve. Is that an accurate interpretation of how that works? And I mean, does it seem as if the nationally chartered institutions effectively had a bit of a shortcut based on the OCC actions, or are we still in a better position based on the way that we're working through the Speedy Bank Charter? Can you provide a little more context with the OCC decisions and the Speedy Bank Federal Reserve interaction?
Nick.
Thank you, Mr. Chairman. Thank you for the question. I'm not able to comment on the status of accounts or the relationship between an OCC chartered or OCC conditionally approved bank and the OCC or the Federal Reserve. What I can tell you is that the Speedy Charter allows under our law, Speedy Charter has the ability to go through the process to obtain a master account and ask the Federal Reserve for that account or to request that account. And a Speedy also has the ability, if it chooses to do so, to seek FDIC insurance. I think the process that has been set in place by the laws we have passed have positioned our charter or institutions chartered in Wyoming to go through the process to obtain the access that they would want to serve their customers.
No, for now, thanks.
Mr. Chairman,
Representative Sith.
Mr. Rochadle, thank you. And this is perhaps a follow-up to Senator Rothfuss's question. If the OCC is allowing nationally chartered banks to have custody of digital assets, and those banks can make loans, but our Speedy institutions don't make loans, right? Can't, I don't think. Wouldn't that potentially give a competitive advantage to the existing OCC banks to, do that and skip our Speedy bank process altogether? I guess thank you.
Yeah, I wondered the same thing. I almost asked it in the reverse. Is there some type of, to add on to that, is there some benefit that the nationally chartered bank would have to avail itself under Wyoming? There would be no benefit to go backwards after they've already got a national approval. Or would there?
Thank you, Mr. Chairman. Thank you for the question. Right. I kind of want to step back a little bit because going back to my prior comment about the OCC is reviewing the prior OCC administration's actions. I don't have insight into what that process is. I would imagine that would create some uncertainty for national banks in terms of would they rather have one charter versus the other charter. I think in Wyoming, we have worked and this committee has worked very hard to provide more clarity and more certainty to the process than what currently exists with the OCC.
Well, getting into clarity question, one of the things that as we were developing the Speedy Bank work and the digital asset custody simultaneously, an important component of our work was the clarification of the digital asset custody under the Uniform Commercial Code. Has the OCC in any of their letters commented on what they expect the legal structure or legal recognition to be in any state other than Wyoming where there is a nationally chartered bank that may not be a Wyoming domiciled nationally chartered? I don't think we have maybe we do. Wyoming domiciled nationally chartered banks. What's the expectation really on the legal standing or legal certainty of those digital assets when there really is no underlying law that recognizes what they are?
Nick. Thank you, Mr. Chairman. Thank you for the question, Senator. I'm not aware of the OCC providing the type of clarity around what is a digital asset as compared to what we have done here.
Follow up on that.
Yes.
To be a little bit candid, I mean, it seems to me, and you can't necessarily comment on this, but it seems that the OCC was a little bit sloppy on this, and I don't know. Realistically, with no underlying legal structure to point to, we spent years creating the legal structure to point to, and then built off of it. Who made the request of the OCC, or do we have information on how this came about where it looks like they were just trying to shortcut the process. And do we have information on how that transgressed?
I'm not aware of information on how that occurred, beyond if there's something that points in that direction in the interpretive letters that have been issued by the OCC. Maybe I'm not recalling anything about the process or how they got to the point of issuing those interpretive letters.
Thanks. And is there conversation in the banking community nationally about concern regarding this lack of clarification for a nationally chartered bank where they don't have any underlying legal certainty regarding the management, handling, treatment of digital assets? I mean, it seems to me that banking institutions would be terrified to touch that kind of a product unless there were legal certainty in place.
Thank you, Mr. Chairman. Thank you, Senator. The conversation that has most recently taken place is sort of a lack of organization among the different federal organizations or regulators on digital assets. And some of what I'd like to cover in the fourth area is to update you on what each organization has done. But for example, the new acting comptroller of the OCC, part of his comments that he made were that there had been a lack of coordination among the different federal regulators about digital assets.
Okay, one more question and we'll go on, if that's okay. So based on that, it seems that the path that we've been taking, this methodical path of ensuring that all of our I's are dotted, T's crossed, and we actually have the underlying statutory clarity on digital assets is still the prudent approach to take. And it sounds like at the national level, the conversation is more focused on the appropriate due diligence. So it sounds as if, and maybe that'll be the point of the fourth point, the approach we're taking is still welcomed in doing it in a prudent fashion. Is that a fair assessment?
Yes, absolutely. The approach that we have the legal foundation, the regulatory foundation. As far as I know, we are the only state regulator with an examination manual addressing digital assets. That approach of methodically working through our laws, regulations, examination, and supervision procedures, I think places us in an excellent position.
Thank you, Mr. Chairman.
So in summary, if you're a national trust bank and you're out there and you just so happen to be listening and you realize, wow, we just ran ahead of ourselves. And even though we were able to get an FDIC insurance waiver from the comptroller, there's no certainty or digital asset regulatory framework like Wyoming offers you. So you should hit the pause button and come back through the Wyoming process. That was the summary, I think.
That's my takeaway.
All right.
Well, let's let them continue.
Yeah, please.
Yeah. Well,
Oh,
wait, we've got a
Senator,
banker.
Senator Furphy, a banker.
Thank you, Mr. Chairman. I noticed in the news just yesterday that the U.S. Treasury came out and said that any financial institution accepting digital currency had to meet the Bank Secrecy Act requirements of filling out forms. My question is twofold. Does that apply to Speedy Banks? And secondly, how is this whole process going to work? Thank you.
Thank you, Mr. Chairman. Senator, excellent question. Yes, Bank Secrecy Act, anti-money laundering, OFAC requirements all apply to digital assets. The same requirements that would apply to under BSA, AML, and OFAC will be applied in the context of digital assets. How that works, there are the same, you've got a financial institution. That financial institution is still expected to collect the same information that they would collect for AML, BSA, and OFAC as they would collect in digital asset context, as they would collect for a non-digital asset. So if you have to file a currency transaction report, for example, related to a cash transaction, the expectation would be that you would file that same type of report related to a virtual currency transaction.
On a separate note, Representative Schwartz has joined us. Welcome, Representative
Welcome.
Schwartz.
Thank you, Mr. Chairman. It's nice to see you all here. Some of you I've seen quite recently in Zoom meetings, others not for a long time.
It's nice to be seen in person.
Mr. Jackson, we want your money, so spend it.
Thank you.
Freely, right? Thank you.
And you want our lodging in particular. Or the rest of the state wants our lodging.
Thank you, Mr. Chairman. I will transition to the fourth area, which is going to overlap with some of the questions that you have asked me over the last few minutes. And that is how speedy banks fit into some of the national developments that have occurred recently. I understand it's important, or that this committee is looking for information and an update on some of those national developments. The areas that I intend to cover here are the Uniform Law Commission's work on digital assets under the UCC, the Federal Reserve, the FDIC, the OCC, and things we are seeing in other states. I do want to preface these comments with, I can believe what I want to believe about federal law. Ultimately, I'm not the one who makes the decision on how federal law should be applied. So when I look at what federal regulators are, what they are doing, I think about it in the context of how does that relate to our law in Wyoming? How does that relate to our administration of speedy banks at the Division of Banking? The first area is the Uniform Law Commission. I will tell you, it's really a credit to this committee. The Uniform Law Commission has entirely shifted its approach on digital assets. The Uniform Law Commission released a draft of new laws related to digital assets in April 2021. The approach that the Uniform Law Commission is taking, the principles, their goals are very similar to Wyoming. They are looking to establish the take-free rule for digital assets. And when they use the phrase controllable electronic record, which would encompass digital assets, so I'll probably use CER, controllable electronic record, when talking about this, but that means digital asset. Their approach is CERs, or controllable electronic records, should be taken free of security interests for a qualified purchaser, a good faith purchaser. Their approach seeks to establish perfection of a security interest in a CER. Doesn't require a securities intermediary. Like our law, perfection of a security interest in a digital asset would be through control. And that may mean, for example, in our law, control of a digital asset and perfection can occur through having the private key, having a multi-sig exclusive to the party with a security interest, those same types of controls to establish a security interest under our law in a digital asset should also establish a security interest under the Uniform Law Commission's approach to controllable electronic records. They also, similar to us, are taking an approach in which control over a digital asset, perfection via control, would have priority over perfection via other methods. So really, that approach that they are taking has been a shift in how they approached this a couple of years ago. I think it's aligning much more closely with what Wyoming has done. And it's really, like I said, it's just a testament to the work that has been done in Wyoming around how do we define digital assets under the UCC. I do want just to put in context that there is a slightly different structural approach that they've taken. Their structural approach, as compared to us, the approach that we take is we take digital assets in our law and we map them onto existing categories in the Uniform Commercial Code. We define a virtual currency as money under the Uniform Commercial Code, Article 9. We define a digital security as investment property under the Uniform Commercial Code, Article 9. Because we define digital assets under existing categories, we don't have to go into Article 9 and make the same type of amendments. Whereas the Uniform Law Commission, they create a new category, controllable electronic records. And because they have this new category, they are then proposing to go into Article 9. They would have to add controllable electronic records to various spots in Article 9 to incorporate it in there. So it's just a different structural approach, but the goals are the same. It's the take free rule, perfection by control, and security interests established by control taking priority. With that, I think I'll shift briefly to some of the banking regulators and Senator Rothfuss to get back to maybe your question about some of those regulators. I'll go through the Federal Reserve, the FDIC, and the OCC. The Federal Reserve recently this month released new proposed guidelines on access to the payment system. Others have said this in Wyoming, but what the Federal Reserve appears to be doing is they are establishing a pathway for so-called novel bank charters, which would include speedies, to access the payment system. Those proposals are, there's a comment period. That comment period ends, I don't have the exact date, but it ends mid-July, at which point the Federal Reserve would decide how and if they're going to finalize their guidelines or their proposed policy for access to the payment system. So that, I think it is a good thing that they are looking at creating a pathway for novel bank charters to gain access to the same access to a master account as in the payment system as other banks. The FDIC has also started taking action related to digital assets. In particular, they have also, and actually, let me just back up real quick to go back to the Federal Reserve and make a couple more comments there. I do want to add that our office has been in contact and worked regularly with the Kansas City Fed, with Esther George there. They have been a good partner and been engaged in what is a speedy bank, how does it work, and understanding our bank charter. The commissioner has also recently met with Fed Governor Bowman and Fed Governor Lael Brainerd. Those meetings were very positive. They are very engaged in digital assets in that meeting with the commissioner. And so we have been in regular contact with them to understand and answer their questions and be engaged in what they're looking at. Same thing with the FDIC. The commissioner also recently met with the chair of the FDIC, as well as their new chief innovation officer, to discuss speedy banks and what the speedy bank charter looks like. They have released a request for public comment, asking for comments on what are banks doing or planning to do with digital assets. That comment period, again, closes mid-July, but they are recognizing in what they said in their request for public comment was that banks are increasingly exploring several roles in the digital asset ecosystem. So that recognition that digital assets are something that are becoming part of the banking system, that request for comment, their engagement with us, we see as a positive sign from the FDIC. And our law allows speedy banks to apply for FDIC insurance. So as the FDIC continues to work through these issues, we'll see where they go with it. I don't have any particular special insight beyond what I've just said, but there may be opportunities for speedies to look at FDIC insurance in the future. The OCC, which is a regulator of national banks, just reiterate the comments I made earlier. They've released several interpretive letters related to national bank powers on digital assets. And they have and more recently, they are now reviewing whether they, I guess are reviewing, I don't want to speak for them. They have said that they are reviewing the prior actions of the OCC related to digital assets. I don't know what the outcome will be. And then in terms of states, let me add one other thing on the federal front. DC has been very engaged in digital asset issues. I think they're recognizing the leadership role that Wyoming has played in this area and continues to play. The commissioner has met with the acting head of FinCEN. The commissioner has also been on the Hill and met with staff and members of the House Financial Services Committee, as well as the Senate Banking Committee. So they're very engaged and interested in what we've done here, what we're continuing to do, and the excellent work that this committee has done. On the state level, there are just a couple of states I want to highlight because they are taking actions that are following up on what we've done or somewhat mirroring what we've done with speedies. The state of Nebraska recently enacted a new bill for digital asset depository institutions. It is somewhat modeled on our speedy legislation. And so, they're just, I'm sure their regulators just getting their arms around it. Literally passed, I think, last week, or was enacted last week. The other state I would highlight is Illinois. Illinois has what's called a special purpose trust company bill that is working its way through their legislature. That bill does seem to have some significant support among the state. I'm not really in a position to comment on that bill. There's a lot or comment on how it would compare to a speedy. There's a lot that the commissioner in Illinois would need to do to build out the rules and regulations on a special purpose depository trust company in Illinois. And then just generally, we continue to hear from states all the time with wanting to know about our speedy charter, wanting to understand how speedies operate. We've probably heard from at least a dozen states recently. We've also proactively reached out to states to have conversations about what does our speedy bank charter look like? What would it look like for speedy banks to be operating in other states? So those conversations continue to happen. I think other states are becoming much more engaged on institutions and banks holding digital assets. But at the end of the day, Wyoming continues to be significantly ahead of other states and nationally because of the work that we have done, starting with just the base level of what our digital assets as property and continuing to build on top of that. Obviously, in our division, we have the speedy banks, and then all of you have continued to build out laws outside of our division as well. So while we're seeing a lot of activity and interest, I do think Wyoming continues to be and will continue to be ahead on digital assets. With that, I'll take any additional questions.
Mr. Chairman, thank you. Perhaps a slightly off-topic question, but what if a sovereign nation or government, Germany, United States, or say Mauritania, decided to issue its own digital currency? What's your assessment, if any, of how that would change the banking world or what we're doing?
Thank you, Mr. Chairman. Thank you for the question, Representative. I will admit your question is a little above my pay grade when we get to monetary policy and CBDCs. From the Wyoming perspective, if there are digital assets that are central bank digital currencies that are issued by other countries, we would have to evaluate whether it would be appropriate for speedy banks or other banks to custody or engage in those digital assets.
Nick, as to those three national trust banks that have conditional approval for chartering under the OCC, it seems like the OCC has really presented a path of insouciance towards FDIC insurance. And I guess I didn't realize that, but the OCC can actually waive the requirement that they be FDIC insured. Is that accurate? Because you had mentioned Wyoming could have a pathway for a speedy to be FDIC insured, but the way I understand it, I think one of those trust banks applied for that waiver and it doesn't have to be FDIC insured. mirroring more closely to, I guess, what a speedy would be like through Wyoming. Is that accurate?
Thank you, Mr. Chairman. Unfortunately, I don't know the answer to that question. I don't have enough insight into the particular OCC chartered banks to know where that's at or what's going on with their status as insured or non-insured.
Yeah.
Following up on that, is that allowable though? Is the OCC, are nationally chartered banks capable of operating in the absence of FDIC insurance with approval? Do you know if that's a path?
I'm sorry to not be able to answer directly. I just don't want to be able, I don't want to be in the position of commenting on what the OCC's position is on whether a national bank can operate with or without insurance. So that's the best I can do for you.
If we're done on that topic, back to what the other states are up to, Nebraska and Illinois. So just to clarify, Nebraska passed their legislation and it was signed into law. Do you recall what the enactment or the implementation date is for it, or whether there's a timeline in that legislation for when they would expect their rules and regulations to be drafted?
Thank you, Mr. Chairman. Thank you for the question. Yeah, I have a vague recollection. I think I'd want to confirm this. My vague recollection is October of this year, but I wouldn't quote me on that.
Follow up, Mr. Chairman. And these are, again, my understanding of the legislation is that they're state chartered banks that are substantially similar to our speedy banks, to the point where they may have copied and pasted a lot of legislation. Is that fair?
Thank you, Mr. Chairman. Thank you, Senator. There are differences. My understanding is that under the law that they've enacted, that if a digital asset depository institution is chartered, that they do not actually take fiat deposits themselves, that they are required to use a correspondent bank, which would be either a bank in Nebraska or maybe a branch in Nebraska. That's my understanding. So that is a difference from ours.
Mr. Chairman, then on that, I guess I would ask from the corresponding institution concept, what actually prohibits that at this point in time for a state chartered bank to work with an entity that custodies digital assets? It seems that is literally the way that it's been operating, whether it's state or nationally chartered. And then you have kind of a wall between the two entities that leads to some inefficiencies and delays that the Speedy Bank is really intended to provide a vehicle to overcome. So I guess what am I missing there for the Nebraska Act if they preclude fiat?
Thank you, Mr. Chairman. Thank you for the question. It would just be up to the institution if they were comfortable with that limitation. It is a limitation that's different, that if they wanted to be involved in fiat deposits, they would have to have a correspondent. That's my understanding of the Nebraska law.
And Mr. Chairman, on the Illinois work that's being done for the Special Purpose Trust Corporation or company, that's legislation that's working through the process at this point in time. Has it passed either chamber, or is it just kind of in draft and development?
It has, Mr. Chairman, thank you for the question, Senator. It has passed the House in Illinois. It was working its way through the Senate as a couple days ago. I haven't checked most recently, but it was moving quickly through the Senate as of a couple days ago.
And final question on this topic, Mr. Chairman. That's end of list right now for those that either have or are actively working on special purpose depository institution like legislation. I know other states are interested, but those are the ones that are furthest along. Is that accurate?
Thank you, Mr. Chairman. Yes, that's accurate. Those are the two states that are significantly ahead of other states.
Thank you, Mr. Chairman. Thank you for being here. Some of the comments concerning the Uniform Law Commission's work on controllable electronic record, do you see us needing to do additional work, recognizing they took ours and are working from our end, which is important, but they have continued to work it as well. And so perhaps in collaboration, recognizing we started it, that we need to leverage some of that work that they've done concerning the definition of that controllable electronic record and what control means associated with that definition of an electronic record. Seems intriguing, and it looks like Nebraska is doing that or has done that in relationship to its UCC application.
Thank you, Mr. Chairman. Thank you for the question. From an administration perspective, from administering our digital asset custody law, right now, I have no issue with the way the law is currently set up in Wyoming. If from a policy perspective, we're interested in evaluating the work the Uniform Law Commission has done and seeing if there are improvements or things that we like or things we don't like, I also see no problem with that. This is a constant debate in digital assets, which is, do you take digital assets and map them onto existing categories, or do you create entirely new categories and incorporate into other laws? So they've taken the approach of we're going to create this thing called a controllable electronic record. We've taken the approach that we're going to map digital assets onto existing categories. I think the approach we have now works well. If we wanted to look at an approach that creates a new category, that would be fine with our office too. I mean, I think that's more of a policy decision.
Yeah, please, Ms. Long.
Thank you. Just one quick follow-up. Mr. Rochadle, do you have any idea when the Uniform Law Commission is expected to finalize the language for the new proposal?
Thank you, Mr. Chairman. Thank you, Caitlin, for the question. I do not. The proposal was released, a draft was released in April of this year. I'm aware that they've met a couple other times or have a couple other meetings planned to follow up on that draft. I don't currently know when they would plan to finalize it.
All right. Well, two things in closing then. Number one, really appreciate Commissioner Faulkner sending you to meet in person with us. Yes. Really appreciate that, actually. It really does mean a lot. It shows how important this subject and this committee is to that division. And, throughout your presentation, you referenced we a lot, and I think that's 100% accurate. We definitely couldn't have accomplished in Wyoming what was accomplished without the great partnership that we've had with the banking division. So really appreciate that. Glad you're on board. Number two is when the Badgers play the Wolverines, who do you root for?
Mr. Chairman, thank you for the question and putting me in the difficult position of answering this question. I believe, just maybe for background for the public, I did my undergraduate at the University of Wisconsin, law school at the University of Michigan. I believe sports affiliations tend to sit more with undergraduates, so I would root for the Badgers.
That's the wrong answer.
It's his answer.
That's fire. All right. Well, I don't know if we have any public testimony on this. I don't think. We probably should.
Clarissa, do we have anyone in the Zoom world? How about in the physical world? Yeah. All right.
Does Representative Schwartz want to say
Representative
something
Schwartz?
about this? Thumbs up? No? Okay. He's good.
He's waiting for us to go to lunch so we
Yes,
can spend our dollars in
That's
the
right.
county or
Where are
Teton
we?
County.
Teton?
Wow, that was a real slip. Ms. Long.
Thank you, Mr. Chairman. I just want to commend everybody here at the Uniform Law Commission. For those of you who don't remember, came after each and every one of the legislators really hard 2 years ago and demanded that we set back Senator Nethercott's SF 125. Remember that? And 2 years later, it really is worth noting that they are copying us. And I think it's a wonderful thing. And there are going to be differences, to Mr. Rochadle's point. And one of the things that this committee will presumably be facing is how do we reconcile those two? Do we keep what we did, or do we just adopt the uniform law? And that'll be something that presumably will come up. I don't know if it'll be during this year, might be next year, but I just wanted to pause and remind everyone of how difficult that was. And look where we are 2 years later. Thank you.
Yeah, if there's a policy consideration, hundreds of bills late, but maybe we should think about an intellectual property right on our bills with royalties back to the state of Wyoming.
Yeah, there we go. Speaking of NFTs, that's right. And Mr. Chairman, I will note also that we've got some folks that have been working with that, the Uniform Law Commission working group, that have also been part of the working groups that have helped us draft our legislation. So they have been instrumental in getting us to where we are now with the work that we've done on getting the UCC map through Senator Nethercott's SF 125. And we really appreciate that cooperation that we have now, and it makes a big difference for all the rest of the work we've been doing. One example of that was on the Dow legislation, where we had one of those experts come and point out some possible concerns with digital assets in the scope of the Dow, and we put forward some amendments that we passed in the legislative session as a result of that. So having those types of team members participating with us has really strengthened our product, and I appreciate all of the work that they've done out there and on our behalf as well.
Absolutely. All right, committee, sensing you're eager to move to lunch, we will break for our lunch break. We're going to take a 90-minute lunch break because we are insanely ahead of schedule. And so 90 minutes.